fact that the unemployment rate is going down is something that, of course, is quite surprising.
It feels like a lot of optimism has been priced in the market, but we do expect a soft patch later this year.
The story here is not the headline.
If the labor market's okay, their urgency to cut goes down.
Base case, we have them not cutting. Certainly July is off the table.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, attention shifting from taxes to trade.
I think we'll have most countries done by July 9th, yeah? Either a letter or a deal.
But they go into effect on August 1st. Tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
The White House preparing to set tariff rates in the face of shifting deadlines. As President Donald Trump signs his major tax and spending bill into law, the Tesla CEO Elon Musk unveiling his bid to start a new political party, putting Tesla stock back in a spotlight.
A lot to digest this Monday morning, especially as we have this tariff deadline looming. It really feels like parallel tracks, though, Jonathan. The president, very late last night, putting out a Truth Social post saying that there will be deals announced today, letters, trade and tariff letters sent to a number of countries by noon today. At the same time, his own Commerce Secretary and the Treasury Secretary talking about now August 1st. So it feels like the deadline is shifting, and it always felt like this deadline was a bit fluid.
So July 9th was the self-imposed 90-day pause. That's in a couple of days' time. August 1st is when the tariffs kick in. And after Secretary Bessent spent over the weekend, a lot of people just assume there's some space here to negotiate. Now, the president also said, just to confuse things even more, the letters will go out at noon today.
Right. So what this all says to me is very simply, they do not have the deals done yet, because the second a deal seems like they are close and at the finish line, the president takes to Truth Social or has a press conference in the Oval Office, like he did with the United Kingdom, like he did just a few days ago with Vietnam. So they're still working through a few details, clearly. The Treasury Secretary is talking about 18 trading partners. We have been saying for weeks, when you speak to the other side of the table that are negotiating with the White House, they say if you are negotiating in good faith and they feel like you are far enough along, the White House has told them that they will give them the breathing room and the space beyond July 9th. July 9th is Wednesday, so a lot of those trading partners are going to get more days.
That's the focus coming into a brand new trading week. The single name focus so far this morning, one name, Tesla, in the pre-market, down by more than 6%. One quote from Elon Musk, enough to wipe out some serious gains on this stock. You want a new political party? You shall have it.
Well, what you're seeing right now is the feud, once again, back in play between Elon Musk and the president of the United States. This is not what investors or the board of his companies wanted to see when they saw him leave the White House and leave Doge. Dan Ives, who we're going to be speaking to, says that exactly, very simply. Musk diving deeper into politics, now trying to take the Beltway establishment, is exactly the opposite direction that investors and shareholders want him to take during this crucial period for the Tesla story.
More on this stock a little bit later this morning. Down hard in the pre-market. Futures doing okay on the S&P 500, negative by about 0.25%. Coming up this hour, we'll catch up with Steve Chiavarone of Federated as a risk-off mood returns to markets. Dan Ives of Wedbush on Elon Musk's new political party, and Andrew Hollenhorst of Citi following a stronger than expected jobs report. We begin this hour with stocks falling ahead of President Trump's Wednesday tariff deadline. Steve Chiavarone of Federated writing the following: the market will get comfortable with the new levels, especially against the background of much greater certainty, pro-growth fiscal policies and monetary easing on the horizon. Steve joins us now for more. Steve, welcome to the programme, sir, and I hope you had a fantastic July 4th long weekend. Let's get straight into this and your expectations for a couple of days' time. What are you expecting from this White House?
I think you've got a last-minute negotiation push here. I mean, I think that's what some of the uncertainty is around. Clearly, having put pressure on, the administration is looking for that last bit of pressure to get these deals where they want them to be. I think that's what some of the threats are. I do think, though, there's some information around the Vietnam deal. I think the Wall Street's been looking for a kind of 10% around the board rate. The Vietnam deal suggests to me that maybe that number is a little bit higher. So I think you could see a little bit of indigestion this week. I think the market may have to become comfortable with a number that's north of 10% as the kind of standard rate. But again, with energy prices lower, with the tax bill now behind us, with earnings estimates stabilized, I think the market will be able to digest that over the course of a week or two and continue to move higher. But this week is going to be a little tricky, I think.
Steve, just to sit on trade just a little bit longer, difficult, of course, to guess the number, but I think we can guess the direction of travel here. Higher than where we were in January, maybe lower than where we were after April 2nd. Can we draw any conclusions about how companies have responded in the last several weeks? Just get an idea of who's going to pay these tariffs. Do they pass them on to the consumer, or are we going to see them take it on margins?
I think it's going to be, I think it's a combination of both. I mean, I think if you've got an item where demand is inelastic, you may see some prices pass through. I think in other cases, you might see it eaten in margin. In some cases, it might be eaten by the importer. I'm sorry, the exporter rather than the importer. And so I think it really is a combination of all three, John. And I think that's the administration's idea here, is that if tariffs are a tax and roughly half of that is going to be paid by the exporter, either through a stronger currency or by them eating it on the margin on their side, that you're really using that revenue to fund the extension of the Trump tax cuts, but only about half of it is paid by the U.S. kind of tax base.
When do you think?
But it's all three.
When do you think, Steve, will actually see clarity on who is actually eating the tariff? Because the deadline just keeps shifting.
I don't think that's a policy thing, Annmarie. I think it really is about the currency. We've seen the dollar weaker the first half of this year. I think a lot of that has to do with the way that the government financed itself ahead of the debt ceiling. You're spending out of the Treasury general account. You're flooding the system with dollars, higher supply of dollars, kind of lower value. I think now that that's behind us and that you've passed the one big, beautiful bill, it's going to be very interesting to see what the dollar does, I think, over the next, let's call it a couple of months. And the higher that dollar goes, the more it's suggesting that it's foreign payers that are eating the tariff. But we really don't know that yet until, we've gotten past the debt ceiling kind of issue. So next couple of months are going to be really telling there.
You think that still, though, the market will grind higher. How does it continuously grind higher in the face of a number of uncertainties?
Well, those uncertainties, which, were kind of holding the market back earlier in the year, have become a wall of worry, right? There was concern that you weren't going to get the one big, beautiful bill done. It's done. There was concern about geopolitics. We've started to see that settle. There was concern about energy prices. Those have come down. There's concern about tariffs. But again, we know what the worst case is for tariffs. The worst case for tariffs was what happened on Liberation Day, was those levels. And whatever's going to be implemented is going to be less than that, with key countries likely to get across the finish line. So, look, being bearish is always easier because you can point to all of the things that are, potentially negative in front of you or that are negative today. The reality is the line moves up and to the right because businesses adjust. And we've got companies that got through COVID when we shut down the economy on a dime. I think we can get past what's essentially a sales tax. And so I don't think what you have here is something that's a long-term destruction of the economy. It's a tax, and companies will figure it out and we'll move higher.
Well, Steve, let's worry about something else, because there's always something else to worry about. Let's worry about the data. Payroll's out on Friday, or rather Thursday, going into the long weekend with the July 4th holiday on Friday. This is what Citi had to say about the numbers. Solid headline, fragile details. There is a worry about maybe some cracks forming beneath the surface, and maybe those cracks come to the surface as we work our way through summer. Why isn't that something to be concerned about for you and the team?
Yeah, so I think what you see is that the labor market has slowed. I don't think there's any question about that. But what you're seeing is not that there's mass layoffs. You're seeing just a slowing of hiring, a slowing of churn. And I think that's what the jobs number really suggested on Friday, that you still have a solid labor market, although be it a little bit slower, with some cracks in it. And I think that's really kind of what the market has come to internalize with the, a series of data over the last couple of weeks. Now, the question is, how does the Fed respond? And I think what you've got there on the Friday number is a number that was strong enough that you don't need to be overly concerned about the labor market. That's the good news. Soft enough that the Fed still does need to be marching towards a cut. Now, maybe it doesn't need to be July, but I think it certainly needs to be, or September certainly needs to be in the discussion. And that's something that we've talked about over the last several weeks. And so I think it was a number that was kind of, I don't want to say Goldilocks, but it was a number that was strong enough to give you confidence about the economy, but weak enough to suggest that the Fed is still in play. I think the market is comfortable with that.
Steve, that slowdown that we've started to see in the underlying data in the labour market, for instance, do you expect to see any of that in corporate earnings and the outlook that we might get from companies through the next week? Delta Airlines this week, the likes of JP Morgan kicking off bank earnings next week. What's going to be the outlook from them?
Well, I think it's going to be industry dependent. I mean, I think, look, credit looks good still. I think the labor market looks broadly okay. I think the banks are going to be in good shape. I think you could see net interest margins and net interest income a little bit better than expected. And I think ultimately what could be the surprise on the earnings side, I don't know if it's this quarter, but it's either this quarter or next, is that now in the face of greater tax certainty, with greater tariff certainty likely to come at some point, but hopefully over the next month, I think you can see earnings estimates probably next quarter and into next year actually start to rise. I think you can get into a beat and rise scenario because the max uncertainty faced by corporates was really the last couple of quarters, and that is kind of waning. I think you're going to see companies get through this quarter, but as you get into the third quarter and they're starting to project earnings for next year, I think you're going to see a kind of beat and raise scenario that is the next leg of the market driving higher.
Steve, just on that point, are your confidence levels on that story higher for certain sectors versus the others, or is this just an index level story you see improving in the months ahead?
I think it's going to be better for cyclical sectors. I think it's certainly going to be better for sectors that are domestically focused. I think you're going to see smaller companies have more of an upside there than you would some of the larger companies, particularly because those tax rates and some of the tax policies will really matter more for them, as does deregulation. I think maybe some of the defensive sectors have gotten a little bit expensive in the first part of this year. You've seen them underperform a bit as cyclicals and growth and small caps have taken over. So I think you will see it at the index level because I think that's enough of the market to drive the index level. But I do think there are winners and losers here. And I think the bigger winners are those parts of the market that are tied to the economy staying stable, getting a little stronger, those that are a little tax sensitive, and those that are more domestically focused.
Hey, Steve, appreciate the update. As always, Steve Chiavarone of Federated, still constructive and bullish this equity market. Equity futures recovering somewhat, still down by 0.25% as we ease our way into a quieter trading week. This week, we'll get FOMC minutes on Wednesday, the same day we see that self-imposed deadline expire, the 90-day pause on tariffs. Next week, things really pick up. Bank earnings and CPI. Look out for that a week tomorrow. Equity futures recovered just a little bit then in the last 10 minutes or so. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Yahara Arnott. Hey, Yahara.
Good morning, John. We begin with the deadly flooding in Texas. Rescuers there are still searching for survivors after catastrophic events over the weekend. The flooding killed more than 80 people, including many children attending youth camps. It's feared the casualty count will climb with more heavy rain forecasts in the coming days. Meanwhile, the Trump administration is preparing to send tariff letters to dozens of countries with its 90-day tariff pause set to expire this Wednesday. Speaking alongside Commerce Secretary Howard Lutnick, as you can see there, President Trump said most nations will have a deal or letter by then. Lutnick said the new tariff rates will go into effect on August 1st. And Elon Musk says he has formed a new America party after President Trump signed into law his tax cut and spending bill that the former First Buddy repeatedly denounced. Musk made the announcement in a post on X after 65% of respondents to a poll backed the idea. That's your Bloomberg brief, John.
Yahara, thank you. More from Yahara later on this hour. That stock, Tesla, down by 6.3% in the pre-market. Up next on the program, Trump giving final notice.
Sending letters out on Monday having to do with the trade deals. Could be 12, maybe 15. I think we'll have most countries done by July 9th. Yeah. Either a letter or a deal.
July 9th, just 2 days away. Looking ahead, Terry Haines of Pangea Policy joins us next. Live from New York City this morning. Good morning. Tesla, the one to watch in the pre-market. The name is down by more than 6% this morning. Plenty of reaction to this. Dan Ives of Wedbush saying very simply, Musk diving deeper into politics is exactly the opposite direction that investors and shareholders want him to take. Dan Ives is going to join us in about 15 minutes' time. That's a single name story in the pre-market. More broadly, equity futures doing OK. Equity futures negative by only 0.25% on the S&P. On the Nasdaq this morning, negative by 0.4. Under surveillance this morning, Trump giving final notice.
Sending letters out on Monday having to do with the trade deals. It could be 12, maybe 15. Some will go out on Tuesday and Wednesday, and we've made deals also. So we're going to have a combination of letters, and some deals have been made. I think we'll have most countries done by July 9th. Yeah. Either a letter or a deal.
So here's the latest this morning. President Donald Trump saying the U.S. will send letters to trade partners starting at noon today, as his pause on higher tariffs is set to expire on Wednesday. Joining us now from the nation's capital is Bloomberg's Tyler Kendall. Tyler, a lot of people waking up in this market this morning with one question after all the comments over the weekend. Just what is the actual deadline?
Yeah, hey, John, good morning. Well, the administration has signaled that perhaps there's some leeway here in terms of a perhaps 3-week extension. Administration officials have said that they're going to send out the letters in the coming days, but the levies aren't going to go into effect until August 1st. And we heard from the Treasury Secretary Scott Bessent in an interview over the weekend saying that the administration's playbook is what he called maximum pressure, that they're hoping by sending these letters that will light a fire under the trading partners to essentially put their best offer on the table. Now, President Trump said that these letters are going out to 12 to 15 of our trading partners. We know the White House was negotiating over the holiday weekend with officials from economies that have long been prioritized, including South Korea, Japan, India, the European Union. We should also probably note that officials from Vietnam were here in Washington. Even though we've already gotten an announcement of a framework agreement, it's clear that things are fluid and they're still ironing out the details. I will also add that the Treasury Secretary said that at the end of the day, they're likely to send 100 letters or so, because that will include some of those smaller countries that don't do as much trade with the U.S. and are going to face probably that 10% baseline tariff. But I bring it up because it probably previews a little bit of the messaging that we're going to hear out of the White House in the coming days, with the Treasury Secretary saying that these would basically amount to the so-called deals, even though it doesn't appear a lot of negotiating was done, because, John, these are the rates they're going to have to pay if they want to do business with the U.S.
Tyler, do you have a sense of the pecking order right now? Who actually is going to get a deal by the 9th? That is a framework outline like we saw potentially that the U.S. did with the United Kingdom?
Well, it's actually, Annmarie, been really interesting to see how some of these economies that have been prioritized, those economies in Asia that are geographically close to China, have sort of been shifting in terms of the order. Take Japan, for example, with President Trump has recently ramped up his threats against because of some of the sticking points in the negotiations there, particularly when it comes to the sector-specific tariffs related to autos. We're seeing sort of the same messaging when it comes to India. Of course, President Trump ramped up his comments and his threats against any nation he says are aligning with anti-American policies of BRICS countries after a summit of those nations over the weekend. But India has also said that they're prepared to launch retaliatory tariffs, something that the administration doesn't want to see and likely isn't liking the sound of that, particularly when it does come to also negotiating those auto tariffs. So that's been a really interesting dynamic. These are the countries that we were expecting agreements, but it is clear that there's still a lot of issues that they need to work out.
Tyler Kendall with the latest. Tyler, thank you, down in Washington, D.C. Annmarie, still trying to figure out who's at the front of the line here and who's at the back. This is the latest from Europe this morning, from the EU Commission. The President, Anne von der Leyen, the EU Commission President, spoke by phone over the weekend.
Yep, the EU is still trying to work towards this Wednesday deadline. They want to get a framework in place when it comes to the agreement. They don't want to be lingering when it comes to the line of who's in the front of the queue. What's so interesting is that the European Union seemed to be on the back foot with this administration, but the last 3 weeks or so, it really changed in terms of the outreach and what they were willing to agree to. Remember, it was just 2 weeks ago they said if there was a 10% across the line base when it comes to tariffs, there was going to be reciprocity from Brussels on Washington. And then all of a sudden, that disappeared, that evaporated, and now they seem to be willing to be able to take more, not have as many concessions.
This from the Commission just moments ago. The EU still working towards the July 9th deadline for a trade deal with the United States, seeing progress in talks towards that trade deal. Joining us now to extend the conversation, Terry Haines of Pangea Policy. Terry, good morning. Stocks at all-time highs. We've passed the one big beautiful bill. Does that embolden the president to go hard this week?
Well, I think it puts more pressure on the president to get some clarity here, frankly. And the president continues to. It's not my opinion. The president continues to invite that by saying things like, we're going to have letters or deals. I think we all agree here from our conversation this morning that what you're going to end up with is not quite that. You're going to get frameworks of deals. You're going to get aspirational deals. You're going to get a variety of positive movement, which will be markets positive, and you're also going to get some clarity on the letters on the other side. So, I mean, all this is generally speaking markets positive, but it'll still be a bit of a muddle.
It does feel like a muddle because if you're getting a letter, you're not getting a deal. I thought the whole point of Trump doing this, a maximalist approach, was to get good deals at the end of the day. Why don't they just kick the deadline down the road even more?
Well, they are to a bit. And, I don't see the deal delays the delays on tariffs to August 1st as yet another delay. I see it more as, here's 3 weeks for those of you who haven't taken us seriously to take us seriously and, see if we can't kickstart something. But generally speaking, the lesson markets will learn is that the president's on track to put a lot of this stuff to bed over the next weeks and months. And that's probably good news.
Steve Chiavarone brought up a really good point. Everyone was thinking there was going to be a 10% baseline tariff. But then when Trump came out with the Vietnam deal, which was 20%, and then for transshipping 40%, that 10% quickly evaporated. And people are starting to think maybe the rates are going to be higher. Can we see a lot of these countries get rates that are higher than 10%?
First, Steve's the best. And secondly, the how I would put that is, you look at the specifics of Vietnam, which is, among other things, a prime is used by China for transshipment. And so I think, generally speaking, where there are other countries that have similar characteristics of Vietnam in terms of transshipment, you're going to see that kind of backfilling, and where not.
What does the market want to see in terms of the countries that the administration is prioritizing and could try to get a framework by this Wednesday?
Well, I think markets want to see any progress at all. Generally, I would offer that the country I would look at is India, and the reason why I would look at India is because not only is it a major world economy, not only is it a country that the United States, both the United States and India, have prioritized in terms of getting a deal, but we're also just coming off this BRICS conference that involved India. So the market, or excuse me, the political view and policy view of getting India to so clearly side with the United States in terms of a trade deal would send a pretty powerful message to lots of economies in the world about what the United States is willing to do to increase interdependence.
Terry, just one more beat. Let's take it away from trade. Let's talk about domestic politics. The New America Party. Congress, as you know, is operating with really thin margins down in Washington, D.C. If Elon Musk really pursues this, could this upset the midterms?
There's potential for that right now, but it's really, really far away. We're looking at 18 months out, so anything anybody says today isn't, I think, doesn't have much validity for the result. I will say this about Musk. There's five things Musk needs to do to provide a credible alternative. First, he's got money, certainly. Secondly, he has to have a credible brand, and he's torched himself with the most engaged political people on both the left and the right. So I think the brand is kind of torched. Thirdly, you got to have some trust in the project, and probably not if your brand's bad. Fourthly, you got to have a plan, and there isn't any. And fifth, you have to show that in the past you've had some results, and he didn't have any with those. So I'm thinking it's a kind of a marginal revenge project.
Terry Haines of Pangea, appreciate your opinion, sir. Thank you. It's certainly hitting the stock so far this morning in the pre-market. Up next on the programme, Dan Ives of Wedbush on Elon Musk's New America Party, plus Yahira Anand with your morning movers and the impact on shares of Tesla. We're down by 6.5%. From New York, you're watching Bloomberg TV. Two-day winning streak going into the long weekend on the S&P 500. Record highs coming into a brand new trading week. It's a 2-week winning streak on the S&P. Equity futures this morning negative by just 0.25% on the S&P, staring down a series of deadlines. Is it July 9th, August 1st? We'll debate that throughout this morning with 3 hours until your cash open. Let's get to your morning movers with Yahara Anand. Hey, Yahara.
Hi, John. We start with our big mover of the day, and that is Tesla, down now 6.7% after Elon Musk launched his new political party, delving deeper into politics and drawing fire from President Trump with two things investors and your next guest, Mr. Ives, obviously do not want to see at a time when Tesla sales are falling worldwide. And next up, we turn to some M&A news. We have WNS here. France's Capgemini is buying this U.S.-listed company, and as a result, shares are soaring 13%. And this is really an AI play by Capgemini, which is an IT services firm. It wants to be able to provide its clients with agentic AI, which we all know can make decisions on its own. And instead of developing that type of technology on its own, it's going out and buying a company that can already do that. And we end with Geo Group and Core Civic. If you are unfamiliar with these names, these are the two largest operators of immigrant detention centers in the U.S. Geo Group is up 7.5%, Core Civic up 2.4% after President Trump signed his massive tax and spending bill into law, which triples federal funding for detention centers as part of his broader crackdown on immigration. So these are two clear winners from that. John?
Yahara, thank you. More from Yahara later on this hour. On a raise out this morning, President Donald Trump threatening an additional 10% tariff on any country aligning themselves with the, quote, anti-American policies of BRICS. This coming as the U.S. prepares to send out tariff letters to dozens of trading partners.
This is why Terry Haines is perfectly right when he says India is going to be really important, because this is an ally of the United States. Modi made this trip very early on in the Trump administration, just after he was inaugurated, to get ahead of it. He knew the tariffs were coming down the pipeline. India is now talking tough, saying potentially they could retaliate, and they are part of BRICS. And the president is saying if you're part of BRICS, then you're going to get an even extra penalty when it comes to these tariffs and trade deadlines.
So does China get an extra 10%?
Well, with China, it's interesting because we still don't have the details of the framework the administration continues to talk about when it comes to the Geneva and London talks. I was there at the London talks. Where is the language? We do not have the deal that they've put out. We know it's about rare earths. We know it's about export controls, but we don't actually have the final framework. And what it feels like with China is people are saying this is a deal. This really isn't a deal. Both sides knew that they had to de-escalate from where they were. Is it a grand bargain deal? Where's the purchasing agreement? Where's TikTok? There's a number of questions when it comes to China and Washington that still linger.
The president looked to make an example out of China just a few months ago. I wonder this time around who will be made the example of. It's not going to be Europe, based on some of the conversations we've heard over the past few weeks or so. Will it be Japan, based on the direction of travel over the past few days?
Isn't it so interesting that everyone said that India and Japan were top of the list, Europe was bottom of the barrel, and now we are getting ever so close to July 9th, and it looks like the European Union is pushing all they can to try to get this deal over the finish line. The Treasury Secretary over the weekend was talking about the fact that it wasn't just Ursula von der Leyen. The president has had some frequent phone calls now. We know that they just had one yesterday, but a number of countries, heads of state, reaching out to the president saying, we want to make sure we get a framework and an agreement. When it comes to Japan, they're dealing with a lot of domestic politics, especially when it comes to the auto sector. And for Trump, that seems like that's a red line.
July 9th, 2 days away. I want to turn to the energy market. OPEC Plus agreeing to a bigger than expected production increase of 548,000 barrels a day next month. The move putting the group on track to unwind output cuts a year earlier than planned.
So economically, OPEC might be looking at this and saying, we're going into summer, peak demand. The market could absorb all of this, and we're going to go after market share. At the same time, they could be scoring political points with this administration who continuously talks about the fact that they want to see lower energy costs. The issue President Trump is going to have, of course, is what does this mean for U.S. domestic producers that are saying, at these prices, we are not going to drill, baby, drill anymore.
Crude actually a little firmer this morning, up by 0.75%. Brent crude at the moment 68.81, WTI 67.13. Let's turn to Tesla. The CEO, Elon Musk, saying he has formed a new political party called the America Party. President Trump slamming the move.
It's always been a two-party system, and I think starting a third party just adds to confusion. It really seems to have been developed for two parties. Third parties have never worked. so he can have fun with it, but I think it's ridiculous.
Joining us now is Bloomberg's Craig Trudell. Craig, the president thinks it's ridiculous. I'm sure some shareholders do too with this move in the pre-market. Before we get into the politics, let's just talk about the company. Craig, what's the condition, the state of operations currently?
Not good. And we got a fresh indication of just how poorly the company is doing last week when they reported another 13% decline in quarterly sales. So, you know, the vehicle deliveries reported for the first quarter, there was, you know, some question as to just how much of this had to do with, you know, Musk and his politicking and just how much it had to do with the Model Y changeover. That's their most important vehicle. And they did have, you know, all of their factories go down for some time in the first quarter. By the time you got to the second quarter, you had that fresh product, you know, sort of, you know, that arrow in the quiver. And yet Musk, you know, also was, you know, giving investors this notion that, you know, I'm going to turn back to the business now that I'm done with Doge. He has not, you know, done that, you know, as we've seen on a sort of day-to-day basis. He's you know, continues to kick things up in Washington, and now has made himself not only an opponent of the Democrats, but an opponent for the GOP and for President Trump.
Craig, when you look at the data right now for car sales, not just in Europe, but around the world, do you see a brand issue that's unique to Tesla, or do you see an industry problem that others have too?
It's a really important question, and one that is, you know, couldn't be clearer, where, you know, here in Europe, you are seeing consistently Tesla being, you know, down month after month, and industry-wide EV sales are actually quite strong. And it's been a bit surprising because early this year we had, you know, the industry lobbying furiously for relaxing CO2 regulations, right? There was this real concern that the sort of incumbents, the established car makers, weren't going to be able to get their emissions down fast enough. Instead, we're seeing, you know, companies like Volkswagen have a bit of a sort of pickup in electric vehicle sales, while Tesla is really taking it on the nose. And so this is not a case of you know, the industry more broadly having you know, problems with EV sales. You know, I would also point to GM just this past quarter in the U.S. More than doubled its EV sales. And so this is an issue of Tesla clearly having problems with, you know, winning over car buyers and people looking to alternatives, you know, perhaps, you know, for the reason of Musk more so than anything else.
Craig, appreciate your time. Craig Trudell there of Bloomberg. The stock is lower by a little more than 6% in the pre-market. Here's the take from Dan Ives of Wedbush, writing the following. Musk diving deeper into politics is exactly the opposite direction that Tesla investors and shareholders want him to take. Dan joins us around the table. Dan, good morning.
Great to be here.
How much of a problem is this?
It's a huge problem. I mean, like, it's what we've been talking about, you know, here in the show, you know, for months, that you went from Trump administration, Doge, BFFs. Obviously, there was a huge moment. You had to step back from politics, and that's exactly what investors want to see. And now you poke the bear in terms of Trump, and now you're forming a political party. So the point is, I believe you've now hit a point. I think the board's going to have to get involved, because this is now over. I think there's a line in the sand that he's now starting to cross, and that's the frustration. As someone that's a huge supporter of Tesla, autonomous, the golden age ahead, you cannot kind of go down this path, and I think that's why the stock's reacting.
Let's unpack that. Board involvement. Describe what that might look like.
Look, I wouldn't say it's necessarily an ultimatum, but, you know, you cannot keep going down this path where, you know, to start a political party ahead of the midterms, I mean, the amount of work, time, and also you alienate potentially, whether it's Republican Party, whether it's Trump. So now Trump goes from obviously a huge supporter to, is that sort of an enemy or blockade? And I think that's why the stock's reacting the way it is, because the last thing you want to see at this point, autonomous, regulatory, that now Musk goes from front seat in the White House to ultimately you become more of a foe.
When you say ultimatum, you mean the board saying to him, if you continue this behavior, you can no longer be CEO.
Look, I think the board's it's a tricky path, right, for the board. And this is not a board that necessarily has had such a, you know, a huge backbone when it comes to Musk. But I do think, look, investors, there's exhaustion.
Do you want to see a new CEO?
Look, I want Musk to stay CEO as Tesla, because in my view, Musk is Tesla, Tesla is Musk, the biggest asset of Tesla. But this political journey that he continues to go through. I think it just comes down to investors have hit a point where they want him focused on Tesla and AI. And every time that happens, he just continues to go further and further into the political theater.
He might not be just burning bridges in the Beltway. I want to read you this quote from the Wall Street Journal reporting overnight. Because of the Musk-Trump feud, Beijing no longer views the Tesla CEO as a geopolitical asset and will shy away from publicly courting him. Is he going to have problems outside of the United States as well because of his political involvement in the United States?
Look, it goes back to, like, if you just take a step back here, it's like, let's try in a way to almost alienate every aspect of the ecosystem, right? In terms of the core buyer, to now maybe even Republicans, to what you're seeing in China. Look, China, that's the hearts and lungs of Tesla. I continue to believe Musk is an asset there, and it will play that sort of, nice in the sandbox. But it does show you become an enemy or a foe to Trump. What does that do in the political and obviously the geopolitical? And I think that's part. Look, that's part of the issue here, is that you start to go into a quicksand situation where I think in the view of investors, there's really no upside. And you can say, okay, if you get midterms and you have some success and he has political power, but that's independents have never had really success in the U.S., but it's massive risk. That's why the stock's selling off the way it is.
The analyst community is not exactly bulled up on this stock. It's actually very divided. If you take the 12-month consensus price target, the average is about $298 right now, and that's below where we closed on Thursday. How well understood are these risks as they manifest and evolve over the weekend?
Well, I think the risks now, they continue to expand. And I think that's part of the issue is that, okay, here it is, you go back to a few weeks ago, robotaxi, autonomous, Musk 100% committed. Now it's like, hey, over the weekend while eating a hot dog and doing a July 4th barbecue, hey, let's start a political party. Yeah, it's a good idea. Yeah, we're going to do that. So that's, as an investor, it's the last thing and I heard over the weekend, the last thing you want to see is him go down this path. But I think the bigger worry is as he goes further and further down the path, from a Tesla perspective, does that maybe add risk in terms of Trump becoming more of a blockade rather around autonomous and around some of the...
Just describe what that means. What do you mean by that? What could he do?
A big thing is around the federal roadmap in terms of autonomous. I mean, now this is a key few years ahead for Tesla going not just from Austin, but 25 cities over the next year. If you start to put more blockades in terms of things that they need to meet in order to get on the road, if instead of more of a green light, it's a little more of a yellow or red light, that's the worry. That's what the stock's selling off. It's the fear that over the next 6, 12, 18 months, Trump starts to put little blockades in that.
But at the end of the day, the president is looking out for America's interest. If he just does that, it might hurt Elon Musk, but also might hurt the United States when it comes to competition with China.
And that's why we've said the biggest asset when it comes to autonomous is Tesla. Because when you think of Waymos, they're not going to scale at any level relative to Tesla. So when you're competing with China, Tesla and Musk is an asset, no different than Jensen. That's why, look, the hope is at one point, is there some sort of meeting between Musk, Trump? Can they sort of get to some resolution? The problem is every week it gets further and further, and this is not what you want to see. Just think about it in the context of every other tech company, from Nadella, from Jensen, from OpenAI, from Oracle, heading all down the AI path. You don't want to see Musk now going down the political path.
How much time does he have? You've got a price target of 500 in a pre-market right now. We're at 294. How much time does he have to back away from this?
I mean, I think you basically have what I view as kind of like 90 days, 3 months. I mean, I think there's a 90-day sort of, I could see like some sort of ultimatum where if he continues to go down the path, no different than how we view with Doge and Trump, where he basically on that conference call had to back off. This is a, I wouldn't necessarily say a moment of truth, but this is a time now for Musk. He needs to choose, and you can't keep having these 1 step forward, 2 steps back, 1 step forward, 2 steps back. And that's why the exhaustion is starting to play out in Tesla stock.
Dan Ives of Wedbush. Dan, it's good to see you, sir.
Thanks.
Certainly exhausted by a lot of this. The stock is down by close to 7% in the pre-market. With an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. We start with the latest out of Texas. At least 80 people have died and dozens more are still missing following Friday morning's flash floods. Water levels on the Guadalupe River rose by 26 feet in just 45 minutes. Officials warn the casualty count will climb with more rain in the forecast. Meanwhile, President Trump is planning to restrict shipments of AI chips to Malaysia and Thailand. Sources telling us here at Bloomberg the move is part of an effort to crack down on suspected semiconductor smuggling into China. The regulation would mark the first formal step in President Trump's overhaul of former President Biden's approach to AI. Meanwhile, here's the latest on TikTok. President Trump says the U.S. will discuss a deal with China today or tomorrow, and he says they already pretty much have a deal. Those comments coming as the information also reported that TikTok is building a new version of its app for U.S. users ahead of a planned sale to a group of investors. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. More from Yahira in the next hour. Up next on the program, solid headline, fragile details.
The story here is not the headline. The market reaction is trading off of the headline, but I think the story here is much more about private payrolls. This is a slowdown.
Up next on the program, the view from Andrew Hollenhorst of Citi and why he thinks this Fed is going to be cutting rates before you know it. Live from New York, you're watching Bloomberg TV. Record highs going into the long weekend. Just coming off those levels as we start a new trading week. Equity futures this morning down by about 0.25%, negative by 0.4% on the Nasdaq 100. Under surveillance this morning, solid headline, fragile details.
The story here is not the headline. The market reaction is trading off of the headline, but I think the story here is much more about private payrolls. This is a slowdown and a little bit disappointment on the private payroll side. The broader story here is the slowing in the payrolls that we've seen for some time. I think it's actually confirmed by this report.
It's the latest this morning. The jobs report exceeding expectations, but private payrolls delivering its smallest increase since October. Andrew Hollenhorst of Citi writing private payroll growth was soft and highly concentrated in healthcare, suggesting hiring continues to cool. Andrew joins us now for more. Andrew, good morning.
Good morning.
That was your headline going into the weekend. Solid headline, fragile details. How misleading do you think that headline number actually was?
Yeah, I think it shows a lot more strength in the headline than what we're actually seeing in the details. That hiring, like you were saying, largely government hiring. It looks like there was a quirk of the seasonal adjustment there that just boosted the overall number. And then you look at the private payrolls, and private payrolls, 74,000, that's an okay number for private payrolls, not a strong number, but really concentrated in healthcare. And you can't drive an economy with just one sector. So, yeah, fragile details.
These are all valid points, yet the market priced out cuts, didn't price them in. Why do you think that was?
I think the market reaction actually makes sense. We were pricing some probability of a cut in July, and this headline number is going to be good enough that that's going to keep the Fed on hold again in the meeting at the meeting this month. It's not that there's clear evidence here that the labor market is picking up. It looks more like it's slowing down. But is anything falling off the cliff? Does the Fed need to act urgently? Probably not after this report.
It doesn't feel like things are falling off the cliff, but Torsten Slok put out a note about how the warn notices are going up when it comes to the legality of having to be told that you're going to be laid off in the next 60 days. When do you think we will see that unemployment rate really start to rise?
I think we should see it over the next few months, and that's interesting because that's what the Federal Open Market Committee is going to be watching over the next few months as they go into the September FOMC meeting. It's not just the warn notices. I think to me the most convincing data point is continuing jobless claims. These are jobless claims that people are filing week after week. That should be basically a measure of unemployment, and those are trending higher. So you put that together with the warn notices, what we're seeing in some of the survey data, it's all pointing to a higher unemployment rate. And that's why it was quite surprising to see the unemployment rate move lower in last week's jobs report. But in the July report and the August report, I think we'll see that upward travel in unemployment.
How has the president's immigration policies affected what's going on right now in the labor market?
That's part of the reason that there's so much emphasis and concentration on the unemployment rate. we really don't know what the so-called break-even level of payrolls growth is. So depending on immigration flows, you might be able to run 200,000 jobs per month and have the unemployment rate not move higher, not move lower. Right now, we think that break-even is maybe closer to 100,000 jobs per month. You basically need fewer workers getting jobs to keep the unemployment rate from moving higher. But we don't know. We don't know. The Fed doesn't know. And that's why we're just watching the unemployment rate.
We're told repeatedly that college grads are having a terrible time. Do we have to have a bigger conversation about what AI is doing to hiring and what you've described as a low-churn dynamic grip in this labour market, and not just over the last several months, but for quite a while now?
I think there are two things that are going on there. I think that AI story could be part of this. Now, you would think that AI would maybe affect lower skilled jobs first, maybe not as impactful for the new college grads, but probably having some impact, probably a reason that firms are hiring a little bit less or becoming more productive using technology. But the bigger overall story is just a weakness that we're seeing in hiring throughout the economy. And I think that's bigger than AI, that's broader than AI. This is firms that are just trying to keep costs down, generally speaking.
So here's the constructive view. Some people watching this morning might say this is backward looking. The first half of 25 was full of uncertainty. The second half will be full of clarity on taxes already and next on trade. And what you might see are those two issues become a tailwind through the next 6 months or so. What would you push back against that?
Well, on the tax issue, I'm not sure that we're going to get a big stimulus out of the bill that just passed. This is keeping a lot of tax cuts there that were already there. That means that you don't have a fiscal cliff, but we're not adding a lot of new fiscal stimulus to the equation. So I'm not sure on that one. And in terms of clarity on trade, well, we're sitting here talking about letters that are going to go out. Are we going to find something out July 9th? Are we going to find something out August 1st? I think we still have some uncertainty there. But again, this slowdown in hiring happened before we heard about tariffs. This happened before this administration. This is not about politics. It's not about the political cycle. This is about the natural business cycle in the economy.
We hear a lot that right now in the labor market, it's just stasis, basically frozen. Not a ton of hiring, not a ton of firing. But could trade and tariffs, if it gets too cumbersome for corporate America, mean there's going to be layoffs?
Well, if you have a higher cost structure and that's being driven by anything, it could be tariffs, it could be higher commodity prices, whatever's driving higher costs for you, you start to look for ways that you can reduce costs in other places. And one way of reducing costs, actually one of the easiest ways of reducing costs, is just hire fewer people, right? Moving to layoffs, that's a bigger decision. We haven't seen that happen in the economy. That's part of why the labor market has been so resilient. But just cutting back on hiring. And I think that's part of what we've seen firms doing. And remember, higher interest rates are part of that also. Right? That's where the Fed comes into this. If you're paying a higher interest cost, one way that you can offset that is by paying less in labor costs, by hiring less.
First cut, September?
First cut September. It does increasingly look like that's where the committee is headed. Powell's made these statements about watching the data over the summer. And it's not just about the labor market. Labor market is what would give them urgency to cut. It's also about inflation. Inflation has really slowed, I think, a lot more than a lot of Fed officials thought that it would. That's going to give them a lot of confidence.
We might know who the next Fed chair is by September.
Potentially, that's right. The president is excited to maybe announce someone, although I think it will take a little bit of time. I still go back to what Besson said, which was interviews will start in the fall.
Andrea Hollenhorst of Citi. Andrea, good to see you. Looking for that first interest rate cut in September, believing that the headline number that looks solid going into the long weekend was somewhat misleading, and the details beneath the surface are looking pretty fragile. Equity futures on the S&P 500, not fragile this morning, just a little bit softer. Up next on the programme, Ben Laidler of Bradesco, Henrietta Treyz of Veda Partners, the former Trump White House trade official Kalutkiewicz, and Mike Pyle of BlackRock. The second hour of Bloomberg Surveillance is just around the corner.
There's still some uncertainty around tariffs that has to be reconciled.
I think the president wants higher tariffs because he believes in higher tariffs.
If you think that the end game, we're going to have some tariff on the rest of the world.
Over the next several weeks, we'll find out in Q2, how did companies actually respond to higher tariffs?
As long as tariffs are transitory, we're in a good place for the Fed to cut in a couple of months from now.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P just pulling back from all-time highs on the S&P 500, down by 0.25%, down by 0.4% on the Nasdaq 100. As we look ahead to this week, just one big important date: the self-imposed deadline of July 9th for trade deals. Now, the big question so far this morning is whether that self-imposed deadline is still actually a deadline and whether the new one is early August.
It looks very fluid, and I think it depends on who in the administration you ask. The president last night put out a truth post saying that at noon there's going to be a number of letters being delivered that sets new tariff rates as opposed to the rates that were set April 2nd, and then we had this reprieve. And at the same time, his commerce secretary, standing right next to him on the tarmac, said actually we're setting the rates, but they're going to take effect August 1st. What I have been hearing time and time again from trading partners outside of the United States is that if you are in negotiations with this administration, they have said, we will give you more time past July 9th if we are not there yet, because they are dealing with dozens of countries. What is interesting is how the level of countries is changing, the pecking order. European Union, Ursula von der Leyen had a call with the president yesterday. They seem to be in good spirits. They could potentially ink something, at least some sort of announcement, before Wednesday. Very different from India and Japan, which everyone said out of the gate we're going to be the first ones to get a deal.
Who is at the back of the line? It sounds like Japan. Now, that can change over the next few days. Let's pick out a single name before we get into the conversation on trade anymore. Tesla, down by 6.5% in the pre-market. Elon Musk over the weekend saying he's going to start a new political party. The backlash begins almost immediately.
Immediately, the president said he is off the rails when it comes to this idea of starting a new political party. The issue with Tesla investors, and to Dan Ives' point, at some point he thinks the board maybe has to step in and give him an ultimatum because they're concerned this will put more hurdles in the way when it comes to the regulation environment, when it comes to autonomous driving. That is their problem with Elon Musk getting more involved in politics.
That's Tesla. I think we need to talk about what it could mean for Washington. It wouldn't take long to figure out just how much deficit spending has been approved over the last 5 years or so with the vote of one person. That's how thin the margins have been down in Washington, D.C. And that one person has been the Vice President of the United States, whether it's J.D. Vance or Kamala Harris. The vote of one person putting trillions on the debt pile in the United States of America, and how just Elon Musk backing just a handful of candidates could change the math down in somewhere like the Senate.
You're exactly right. How many times have we seen, that last-minute call, and you see the motorcade come from the Naval Observatory to the Senate to break the tie vote? What you see now with Elon Musk is potentially some people thinking, I agree with some of what he's saying when it comes to deficit spending. I would love to run for political office. I don't have the cash behind me. And maybe he does pick out a few individual people. But what he is saying on X is this massive pronouncement that he is going to make an independent party, which we really haven't seen the heyday of since the late 90s.
Tesla stock in the pre-market down by more than 6% so far in early trading. Coming up this hour, lots to talk about over the next 60 minutes or so. We'll catch up with Ben Laidler of Bradesco as futures slide on President Trump's latest tariff threat. Henrietta Treyz of Veda Partners on the White House's tax bill victory. And Mike Pyle of BlackRock on navigating policy volatility. We begin this hour with futures sliding ahead of President Donald Trump's renewed tariff threat. Trump saying tariff letters will be delivered starting at noon today. Ben Laidler of Bradesco joins us now for more. Ben, welcome to the programme, sir. It's been too long. Let's just get to sort of base case, baseline expectations for the next several days. What are you and the team expected to see?
Well, I'm hoping we see sort of more of the same, right? I guess continued uncertainty, but actually no dramatic changes to this sort of backed off tariff scenario. This does feel a little bit like sort of back to reality. Of course, it never went away. We just forgot about it for 90 days and markets, ripped off the back of that. And I think we're having probably a predictable reset here.
Ben, let's talk about how that reset might shape global markets. The bias at the start of the year was to look to international assets and maybe leave the US behind. The US has snapped back so aggressively, so quickly. I think people are questioning that all over again. Where do you stand on the issue?
Yeah, I sort of think the genie's out of the bottle on US exceptionalism. I'm not a bear on the US. I think the US is fine, but I am looking for much more average returns out of the US, these sort of typical 10% levels, not the twice that we've got used to in the last couple of years. And I think the rest of the world looks pretty good here. You still, in most of the world, have this sort of double equity and FX discount. The weaker dollar's clearly helping. And I think some of these countries have real silver linings to a potential restart of this tariff war.
Well, when it comes to the restart of the tariff war and you're looking at all these countries, who are you most excited about? Everyone was very amped up and excited about Japan, but they've seemed to take in less of a priority with this administration than they did just 30, 40 days ago.
Look at LATAM, if you want to be excited. Cheapest markets in the world, best performing markets in the world this year. Mexico, one of a tiny handful of countries that still have tariff-free access to the US, and places like Brazil, low 10% tariff, lots of commodity carve-outs, and a market which would actually probably like more of a slowdown potentially coming in from the rest of the world. So it's a big world. There are definitely markets out there that I think would could have silver linings here.
It's interesting you mentioned Brazil because the president was saying that any countries that align themselves with policies of the BRICS could be charged an additional 10% tariff. Brazil is the host country for this week's BRICS summit. Do you think Trump is more emboldened now? It's a question Jonathan's been asking all morning, given the fact that he has had the markets at an all-time high and he just passed his one big beautiful bill.
We're going to find out. I guess that's the one thing I know with some certainty. But yes, the Trump put is definitely not as strong now as it was, when we were down in the hole, 20%, plus ago. I would like to feel it's still in place. I would like to feel, Trump feels he's in a better place. Does he really need to go through that all again, introduce that level of policy uncertainty, those even greater drags on U.S. growth? I would hope, cooler heads prevail, but who knows? We still have 90% of this administration to go.
Ben, investors feel like they're in a much better place compared to where they were a few months ago. Are companies, what are corporations doing now, Ben? And a question we asked in a previous hour, have we established how these tariffs will be handled? Will they be passed on or will they have to eat it on margin?
Listen, I think companies are just like the rest of us, right? I think this level of uncertainty, even though it may have come down a bit, is absolutely corrosive to decision-making, to confidence. And I think, everything else being equal, that means that you are hiring less people, you are doing less CapEx. And to your question on tariffs, I think companies have shown us, and the margins are there to prove it, they will pass this on. They will pull that pricing lever at every opportunity.
Ben, which economy, which set of consumers do you think is in a better position to absorb that hit?
Well, it's the US consumer that's going to take most of this, right? So the US consumer is in reasonably good shape, but at the margin, this is all slowing, right? So I'm not sure that the US is in the eye of the storm here. I think the rest of the world, whether it's on the economy side with fiscal stimulus in places like Germany and China, or whether it's on the market side with these double discounts on the equity market and the FX, I think international assets and this global rotation has further to go.
Ben, I'd love to get your thoughts on China, because that is something that the president is still working on, more of a bigger grand bargain deal he talks about. At the same time, they have a framework when it comes to export controls and critical minerals. Do you think China is investable?
I think it's definitely investable. We are seeing very strong inflows into Chinese assets. I was just looking at the numbers this morning from the US ETFs, was like 500 million last week into China, 500 million the week before. So absolutely the money's going in. This is a very cheap market. I think people are betting there's a deal to be done, and there's enough flexibility on the Chinese side they want a deal, and they have the policy stimulus to maybe offset some of the costs to the tariffs they're having to eat right now.
Hey, Ben, appreciate your time. As always, Ben Laidler there of Bradesco. Constructive on global equities, but international assets much more so than, say, the US, which is amazing to see, given the tariff levels we might see develop over the next several weeks.
I know. That's what I find so interesting about all of his comments. Even a place like Brazil, when the president overnight is saying anyone that aligns themselves with BRICS, Brazil is hosting the BRICS summit, is going to get an additional penalty. But I think a lot of countries view this the same way Ben views this, in the sense that this could hurt the United States, but could hurt us even more when it comes to these tariff levels.
They seem to be much more worried about US consumption trends than maybe what might happen to international exporters. And there are some big international names abroad that will have to stomach a lot of this.
A lot of this. And we do know that some of them even went to factories, say in China, saying, you're going to stomach this. And they're saying, nope, you're going to have to do it. And then that comes down to the point we just had the discussion with Andrew Hollenhorst. At one point, does it get too difficult where you're not just saying, we're not going to hire anymore because we have to control some of these costs. We might have to start thinking about layoffs.
Futures this morning negative by about 0.25%. Pretty calm start to a week, filled with risk. Just one risk in particular, trade, of course, and we'll see if we get over that hurdle later on this week. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. We begin with the deadly flooding in Texas. Rescuers there are still searching for survivors after the catastrophic weather event over the weekend. The disaster killed more than 80 people, including many children attending youth camps. It's feared the casualty count will climb with more heavy rain forecast in the coming days. Meanwhile, Israel is sending mediators to restart talks with Hamas in Qatar after the militant group said it was ready to negotiate on President Trump's proposed ceasefire. The proposal includes the return of 10 living and 18 dead hostages. It's been accepted by Israeli Prime Minister Benjamin Netanyahu, who is set to meet with President Trump in Washington today. And Jurassic World's Rebirth scored the top spot in the holiday weekend box office. The latest installment in the Universal Pictures dinosaur franchise grossed over $147 million in the U.S. and Canada, despite mediocre reviews. The film is the 7th in the franchise, which has taken in over $6 billion in ticket sales since the first release in 1993. That's your Bloomberg Brief. John?
Yahara, thank you. You don't wish failure on anyone, but obviously with that kind of success over the weekend, it means we're going to get Jurassic World 1, 2, 3, 4, 5, 6, 7, 8,
Well,
right?
I was a huge fan of Jurassic Park, so I'm definitely going to see this.
Sure.
The original, yeah. Maybe I'll just stay home and watch the original again.
Likewise, but don't you want to sort of incentivize some creativity in Hollywood?
Yeah, good luck with that.
Come up with something new, maybe? Possibly in the future? We can only hope. Up next on the programme, President Trump setting the rates.
I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. Tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
Up next on the programme, Henrietta Treyz of Veda Partners, live from New York City this morning. Good morning. July 9th, just 2 days away, the end of the 90-day pause on the reciprocal tariffs announced on April 2nd. The following day, we'll get some earnings for you. Delta Airlines just around the corner. A week tomorrow, CPI and JP Morgan results. So lots still to come as the week progresses and we start to take a bigger sneak peek of next week. Equity futures on the S&P so far this morning, just a touch softer, no drama here. We're down 1/3% on the S&P. On the Nasdaq 100, we're down by 0.45. Under surveillance this morning, shifting deadlines.
I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. Tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
It's the latest this morning. President Donald Trump announcing letters and tariff rates will go out to trading partners starting at noon today. Trump also threatening an additional levy for BRICS nations. Bloomberg's Tyler Kendall joins us now from Washington for more. So, Tyler, let's set things up over the next several days. What can we expect today, tomorrow, and into Wednesday?
Yeah, hey, John. Well, we should say that the administration wants to show some sort of forward progress here, but it's pretty clear that the situation is fluid. Now, our understanding is they're going to send these letters in the coming days, but that they're not going to collect the levies until August 1st. That would suggest to us that there's a 3-week extension when it comes to negotiations. And the Treasury Secretary, Scott Bessent, said as much in an interview over the weekend. He said the administration's playbook here is maximum pressure, in his words, and that they're hoping the letters will light a fire under some of these trading partners to put their best offer on the table. Now, our analysts at Bloomberg Economics say that there's sort of 3 scenarios that could unfold in the next week. One is that we could see some framework agreements announced, such as what we saw with Vietnam, though worth mentioning that negotiators from the country were here in Washington over the weekend because they are still ironing out the details. The second is that we could see those countries that the U.S. feels are negotiating in good faith get that extension. And they could say that they're making forward progress here and they want to continue the talks down the line. Perhaps the EU would be a good candidate for that, and what's really been sort of a reversal in favor when it comes to how the administration views the trading bloc, with it being confirmed this morning that Ursula von der Leyen, the Commission president, had a phone call directly with President Trump over the weekend. And lastly, John, the third scenario is that the administration is going to dictate tariffs to a certain sector of our trading partners. These are the smaller countries that don't do as much trade with the United States. The Treasury Secretary said over the weekend this could be 100 or so countries that face probably that 10% baseline tariff. But it's worth noting that they're trying to pitch those as deals. And that's sort of the messaging that we could expect from the administration moving forward.
Right. We might see that at noon today, according to the president, when it comes to those letters. Tyler, let's sit on the EU for a second. The spokesman said we're at the beginning of the end game, at least for an agreement in principle. How long are these negotiations going to last, even if you ink a framework?
Right. Well, we're expecting it to last really months, and we need to keep in mind that trade deals often do take a lot of time. Take China, for example, which of course is on its own separate track, but that phase one trade deal took 18 months to negotiate. So it is a really ambitious timeline to get this done. In the European Union's case in particular, we're talking about 27 different member states trying to negotiate one trade deal. And we've started to see sort of a splintering when it does come to those trading partners. We had reporting over the weekend on the Bloomberg terminal that some of these nations want to boost investment in the U.S., for example, to try to spur negotiations forward. But then you have another sector of parts of countries that are saying, instead, let's put into effect our retaliatory tariffs because they don't want to wait around for some sort of negotiation. And that's sort of the tension that we're seeing playing out because, Annmarie, as you well know, they already have $25 billion worth of retaliatory tariffs ready to go to pull the trigger on if they want to immediately. And they're preparing about $100 billion more that could come down the line.
Tyler Kendall with the latest. Tyler, thank you down in Washington, D.C. More from Tyler throughout the next couple of hours. Henrietta Treyz of Veda Partners has this to say. It is our base case expectation that the base 10% tariffs will not come off. We're also expecting the Section 232 sectoral tariffs to be announced in the days ahead. Henrietta joins us now for more. Henrietta, welcome to the programme. It feels like 10% might be the best case outcome for many of these trading nations, including the Europeans. What do you think the worst case outcome might be?
Yeah, I think when we look back and reflect on today in the grand scheme of things, this is going to represent the low point of the Trump administration at this juncture for where tariff rates are going to go. If you listen to what Tyler just explained and where the trade negotiations are, there's no need to delay implementation of tariffs to August 1st unless they're going up. So all those 100 nations, some of them are exposed to 50% tariff rates. But very disconcertingly, the president came out over the weekend and said some of those tariffs could go in at 60 or 70% rates, which would be even higher than the ones he rolled out on April 2nd. And what we're seeing, as in the case of Vietnam, is that they're going to sort of bifurcate whether the nations are shipping things that were made in that country or transshipped. So there's a whole basket of nations in Southeast Asia who are exposed to a blended tariff rate of about 50%, 20% on their own sourced and exported items, and then 40% on things that are transshipped. So we have a 30% effective tariff rate. So that's sort of the direction we're going, and I think we're going to see the sectoral tariffs come on and be negotiated. So things are going up from here, not down.
Henrietta, what you're describing sounds like Liberation Day Part 2. Is the market unprepared for that?
I think the market is trying to operate like this is going to be a nothing burger. We hear the taco stuff all the time, but we are seeing tariff rates go up. And one thing I really want to flag, and I see, Treasury Secretary Bessent on the media tour now talking about the OBBB and these tariffs that are obviously top of mind. But one of the things that he argues frequently is that this is just a one-time hit and not inflationary. And that's inconsistent with the actions of the administration. We've seen tariff rates rise no fewer than 6 times that I could just count while I was sitting here, going into just the first 6 months of this year. And they're set to rise again. That would be a 7th. And then we're going to get 7 different sectoral tariffs. And then we're going to have, 90, 180-day delays in deals with the EU or Japan or South Korea or India. This is a perpetual component, just like it was in Trump's first term, where we got the tax bill done. And we spent the next 3 years raising tariffs, in that case on China and 232s, and I expect to see that again.
Well, two things to point out. The Treasury Secretary consistently makes this case that it's not inflationary because it's a one-time price adjustment when it comes to potentially the hit on goods. When it comes to, though, what the president is doing and what you're pointing out, changing the tariff rates a number of times, isn't that how he negotiates a maximalist approach to then de-escalate? We saw that play out with Beijing.
I mean, you de-escalate from 145% to 33%. I don't know how fantastic that is. And they're all stacked on different tariff rates from this first administration. So I think that the general trajectory is tariff rates going up. And then as things pop up, like this BRICS stuff overnight, you're seeing the president deploy tariffs as his most effective bullet in his arsenal. And I think that that's going to continue because it is an incredibly effective bullet. I'm actually writing a note to clients right now talking about how there will be no leash on the president on tariffs until we get into the general election cycle, which is not until February of next year. So we've got another 6 or 7 months of this.
So, Henrietta, just hold up, because this is important. You've got business leaders and investors starving for clarity, and some who believe that clarity will come on this issue in the coming months. You're saying, as Annmarie has said for quite a while, this might just be a feature of this administration.
Quite right. Exactly so. That's exactly what it was in 2017 and 18. And what I see is almost an exact replica of his first term. You wait to get your legislative agenda accomplished. That was done last week. The OBBB is done. We're not going to be passing any additional legislation. We're going to have to deal with a government shutdown potentially, but the debt ceiling's off the table. There's no need to extend the 2017 tax rates. We're done on the legislative front. That means that the next 3 years, just like in the Trump first term, will be all trade all the time.
Let's address the backlash to that bill that was passed. The backlash from one individual, Elon Musk, unveiling a new party. Now, Henrietta, we were talking about this about 20 minutes ago. I'm not sure if you missed it at the top of the programme. Just how much deficit spending has been approved in this country in the last 5 years by single vote margins, and how disruptive a new party could be if they just target some very tight districts in the midterms. How difficult would it be to put that together with only 18 months, not even, left on the calendar?
Incredibly difficult. So what I notice when I hear Elon Musk talk is that he does go out of his way to highlight that there are a couple of Senate seats that you could really be impactful in. That kind of nuanced thinking is really critical. If you're going to deploy independent cash without, the Democratic Party behind you or the Republican Party behind you, you're going to need to be very targeted. And then you could be very disruptive. Think like Kyrsten Sinema, Joe Manchin, Rand Paul, these individual senators who have outsized sway and impact because outside contributors have propped up or created that member. And that's the kind of disruption that Elon Musk could create if you wanted to. I don't imagine that it would be, all of a sudden there's 3 parties represented equally in Congress, but you could really upset the apple cart in key states like committing to spend in Alaska or North Carolina to take on Tillis's vacant seat or Susan Collins in Maine. There's a couple of ways that you could spend money and have it have maximum impact.
Henrietta Treyz of Veda Partners. Henrietta, thank you. As always, good to see you. Looking ahead, not just to the next several months, but to the rest of this term.
Rest of this term, and Ben Laidler put that 10% way through the 10% we've already gone through, 90% to go through a 1,460-day administration. And to Henrietta's point, the fiscal agenda is done. There's really not much more they can do. That's over with. Now it's going to be fully focused on trade. What's different from Trump 2 than Trump 1 is he is going after the entire world when it comes to resetting tariff rates. This is not just about China.
It's not just China. It's Europe, Japan, India, and a whole lot more. Equity futures on the S&P negative by about 0.25%. We'll talk more about trade in just a moment. The former Trump White House trade official, Kalutkiewicz. Plus, you're higher with your morning movers. Tesla falling as Elon Musk's feud with President Trump heats up once again. Coming into Monday on the S&P 500, 2-day winning streak, 2-week winning streak. Equity futures pulling back from all-time highs this morning by only 0.25% on the S&P, down by 0.4 on the Nasdaq 100. Check out the bond market, the front end of the curve. The 2-year bond yield into Monday higher for 3 straight sessions. Yields up on the week for the first time at the front end in about a month. This morning, we're down a single basis point, 386.97. That's stronger than expected payrolls report, the headline at least. That upside surprise unlocking some higher bond yields. going into the long weekend. Yields this morning just a touch lower at the front end of the curve. Want to turn to crude and finish on energy for you just briefly. WTI and Brent, little move this morning, but plenty of action over at OPEC Plus, initiating another boost to supply.
Another boost to supply, and it looks like potentially the market can absorb it. That's what Saxo Bank is saying. In the short term, downside risk to crude appear contained, because not only are they adding more, when you saw the prices that the Saudis are sending to Asia, they've boosted those prices. So clearly the market is able to absorb what they're putting in right now. But that's because we're at summer peak travel demand. And they may be trying to get ahead of what people are saying 2026 is going to look like. Not a time when you want to try to increase that market share.
This is a well-supplied market right now, that's for sure, in the minds of many. Crude down by 1/10%. WTI 66.93. With 2 hours until the opening bell, let's get you some morning moves and cross back over to Yahira for more. Hey, Yahira.
Hi, John. We start with Tesla down 6.4% in the pre-market after Elon Musk launched his new political party. And the way Dan Ives put it to you and Annmarie earlier is that this move lower is on the prospect that this could sharpen the divide between Musk and Trump, and it could lead to Trump blocking Musk's autonomous driving ambitions. And of course, this idea that Musk is too distracted with politics at a time when Tesla needs his leadership. Moving on to another automaker, we have Stellantis now down 4.2% on a downgrade by Bank of America to neutral. That's because they are expecting to see a very weak first half report later this month. They say that even though Stellantis is making progress here in the U.S., it is struggling over in Europe, especially on EVs, according to B of A. And we end with Boeing. This is it's actually up about 0.1%, but it's among a few stocks that we are seeing move as President Trump's July 9th tariff deadline looms. Investors are worried that new trade barriers could drive up costs for the plane maker, which of course relies on a global supply chain, but also that China's retaliatory tariffs could make its planes more expensive than its rivals like Airbus. And I will note that China is a key and growing market for Boeing. John?
Yahira, thank you. Appreciate it. More from Yahira in just a moment, and more on Boeing as well. In about 40 minutes' time, we'll catch up with Sheila Kahyaoglu of Jeffries. On our radar this morning, one of our top stories, President Donald Trump threatening to impose an additional 10% tariff on any country aligning with the anti-American policies of BRICS. The threat comes as the president prepares to send tariff letters starting at noon.
So what's so interesting about this, of course, is everyone thought India was going to get a deal almost immediately alongside Japan, but India is also a part of BRICS. So are they now in the crossfires of the president with any country that is aligning with BRICS, but actually India is in BRICS? There's a lot of confusion. This deadline was self-imposed. It feels very fluid. You have the president saying he's sending out letters today at noon. You have his Commerce Secretary, Howard Lutnick, standing next to him yesterday on the tarmac, almost giving a little asterisk as the president is talking about tariffs. He's like, whoa, actually, August 1st is now going to be when the tariffs come into effect. So if you are a trading partner, you realize you really have between July 9th and August 1st until potentially they kick the can down the road again.
A lot of people in this market just want to move on. Decent case study for that was last week, Vietnam. They come out with tariffs on Vietnam of 20%. They sound really high, but they're so much lower than April 2nd of 46%. Market just wants to move on. I'm not sure this is what many investors want to see. Drag this out for another several weeks. Extend and pretend. Set something, move on, seems to be what a lot of people have said to us they'd like to see.
Right, but that's not going to be how this works, because even if you come out and say you have a deal, there's still going to be negotiations happening behind the scenes. And we've heard that already from Vietnam officials saying that we're actually still working on trying to make this more concrete. The president almost immediately rushed. You can almost feel the excitement in his truths. He said, we have a deal, I'll be back with the details. And then he came back with the details. And Vietnam said, well, actually, we're still working on some of those details. I think the European Union spokesperson put it best, talking about the fact that Ursula von der Leyen, the president, spoke this weekend. This is the beginning of the end. This means this is going to drag on a lot longer when actually comes to full throttle trade deals. What we see right now is just frameworks and agreements.
Or the end of the beginning.
Yeah.
Because this might take a long, long time. Henrietta Treyz of Veda Partners with us about 15 minutes ago saying what Annmarie said repeatedly, this is a feature. This is going to be an ongoing feature of this administration, according to Henrietta and others. I want to turn to this story. President Trump is criticising former First Buddy Elon Musk's plan to start a new political party. The president calling it ridiculous and saying that third parties have never worked in the US.
They really haven't worked in the U.S. except in the late 90s with Ross Perot. That was probably the high watermark when it comes to political parties. I think you bring up an interesting point. Potentially Elon Musk can shift individuals in specific districts or specific states. The problem, of course, when you're seeing the Tesla stock, is what does this mean for his relationship with the most powerful, important person, not just in the United States, but maybe in America? I think what's interesting is what this potentially does to him abroad. Wall Street Journal this morning is saying that Beijing no longer views Elon Musk as a geopolitical asset and is going to shy away from him publicly, courting him, which they were doing because he was so tethered to Trump. Now you're going to see a lot of heads of state not want to be associated with him because of this feud he has with the president.
Tesla down in the pre-market by 6.5%. Dan Ives of Wedbush pretty clear about this. He's bullish the name. $500 price target, outperform rating, all of that good stuff. Very, very bullish on autonomous vehicles, robo-taxis. He thinks the board should step in. That's his opinion this morning.
What's the red line for the board? Because we've seen this feud already. It feels like one step forward, two steps back. There was supposed to be this phone call. They were supposed to make peace and be friends, again, maybe in quotes. What is the red line for the board? Is this political party? Or potentially is this enough for them to say, if you continue on this, then you're going to have to maybe step away?
That's the latest on Tesla this morning. Let's squeeze in some foreign policy. The Israeli Prime Minister, Benjamin Netanyahu, is set to visit President Trump at the White House later today. Trump telling reporters a hostage deal with Hamas could be ready as soon as this week.
Feels like there's some fresh momentum on this. We had negotiators from Israel and Hamas, together with Qatari and Egyptian mediators, meet over the weekend in Doha to try to formalize an agreement. The president is feeling like he did have this huge victory in the Middle East when it comes to what happened with Iran and Israel, and this would be the final stage. And the president really needs this finalized before he looks at broader Middle East peace agreements. And something we saw in the first Trump administration, of course, was the Abraham Accords. He wants to see another version of that, particularly with Riyadh and Israel.
I think we'd all like to see further de-escalation in the region, that's for sure. That's the latest on Israel and the Israeli Prime Minister's visit to Washington. Let's turn back to trade. Treasury Secretary Scott Bessent saying that some trade partners' tariff rates will boomerang back to Liberation Day levels. Joining us now to discuss is Kate Kalutkiewicz, the former White House trade official and former senior USTR trade negotiator. Kate, welcome to the programme. Is this the beginning of the end or just the end of the beginning?
Well, I think this is President Trump at his best when he's bringing the pressure and supporting his negotiators. I think this is his favorite time of the negotiations, when he can be extremely maximalist. And I think as a trade negotiator, it helps to have a leader like that pushing for the end, pushing for the negotiations to get over the finish line, and providing that sort of threat that helps his team actually tell their counterparts he's serious.
Kate, what determines whether you get a UK outcome, a Vietnam outcome, a China outcome, or something much worse?
Well, I actually think that's quite an important question. And the Vietnam deal sort of shows that there are two different trajectories here. Let's set China to the side for now, because I think that's a separate type of negotiation. But you have a UK outcome and you have a Vietnam outcome. And I think for the list of countries with which the United States is actively negotiating, you see two different pathways here. One for the more developed economies, probably looking for something like the UK got, and those more export-heavy economies that receive those very high tariff rates. Maybe the Vietnam deal reflects what the Trump administration is putting on the table.
Is the Vietnam deal actually done, though?
Well, back to our end of the beginning, you're right, Annmarie. These are framework agreements, and I think you described it perfectly. The truth announcing the Vietnam deal was, I think, quite gleeful. The Vietnamese, of course, later in time said, we still have a lot of things to work out here. But let's make no mistake, this is a really important outcome. The Vietnamese, of course, were on the hook for very high tariffs. They've been, the recipient of the ire of the Trump administration going back to the first time around the increasing trade deficit, particularly as it relates to China. The longer term play for the Vietnamese, however, is going to be how it manages this very, very challenging place they find themselves between China and the United States. And these will be the details on the transshipment that they're going to have to work out.
When you look at what's coming up this week, the president says at noon he's going to be sending tariff letters out. You have the European Union, the Commission, talking about the fact that the president got on the phone with Ursula von der Leyen. They're looking to get some sort of framework before July 9th. What buckets are different countries in?
Well, I mean, I think you've seen the president, his surrogates talk about this smaller set of nations or economies which are much further along. I think the president had been quite hopeful last week. Vietnam would be the first of several announcements that day. And you've seen him signal that talks with India are quite forward, that talks with the EU are quite forward. Obviously, he's been a little frustrated with where things are with Japan. But I think these are the countries that we can expect some outcomes this week if negotiators can get a few of these wrinkles, ironed out.
These are also the same countries, though, that, given the fact that they are in these deep talks, will get extensions. And is that what you think Commerce Secretary Howard Lutnick was talking about when he talked about August 1st?
Well, again, I think the president is trying to signal to these countries that they need to stop delaying. He had hoped to have these deals ready last week. I think this new notion of letters going out is really his way of ratcheting up pressure. Typically, when we see tariffs go into place, there is somewhat of a delay to allow importers some time to adjust. So I think we'll still have to see exactly when things are implemented. But I really do see this more as the president trying to ratchet up leverage.
How surprised are you, given the fact that you were a trade negotiator under Trump, that Japan and the European Union have basically swapped fates?
Well, Japan is quite interesting because I think the president was surprised when he got the Nippon Steel deal across the finish line. He probably suspected that would be sufficient to wrap things up. Of course, the Japanese really want to see an outcome on cars, and the president does not seem inclined to deliver that. Then, of course, when you're negotiating with democracies, this is always the challenge. Japan has an election coming up, which constrains its negotiators. So, it is quite shocking, I think, that we've ended up in this place. But this is part of being a trade negotiator with governments which have to be responsive to their own domestic constituencies. Europe, I think, will get across the finish line so long as we continue to have these leader level discussions. As we've discussed before, the European Union is a very challenging negotiating partner because it does represent 27 different countries. And so if you don't get right to the leader level, you don't get right to these big commercial deals, it's very challenging. So if President von der Leyen and President Trump maintain this dialogue, I think we can get that one finished.
Hey, Kate, appreciate your view. Kate Kalutkiewicz there, joining us on the latest trade push down in Washington, D.C. To Kate's point, the fact of the matter is for the Europeans, to have President Trump set such a high-pressure campaign, to have the Europeans turn around and basically accept, based on our reporting, a 10% tariff without much pushback is quite something.
It's quite something. But also when it comes to the European Union, how long is this going to take? Because to Kate's point, this is dozens of countries with the Commission representing them. This could be very challenging. Domestic politics is going to be hard in Japan. We heard from the Prime Minister of Shiba yesterday. He said we will stand firm because they have an election coming up. So they can't look like they're placating to the United States of America, especially when it comes to two big industries, autos and rice.
If you are just joining us, welcome to the programme. Equity futures this morning, so far at least, just slightly negative. We're down by 0.26%. With an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. We start with the latest out of Texas. At least 80 people have died and dozens more are still missing following Friday morning's flash floods in the city of Kerrville, where water levels on the Guadalupe River rose by 26 feet in just 45 minutes. Now, officials are warning the casualty count will climb with more rain in the forecast. Meanwhile, Iran's supreme leader Ayatollah Ali Khamenei appeared in public this weekend. According to Iran's state media, it was his first appearance since the 12-day war with Israel last month. After weeks of sheltering in a bunker, the New York Times reported Khamenei attended an annual Shia religious ceremony held at his compound. And OPEC Plus agreed to a larger than expected production hike for the fourth straight month. The group increased supply by 548,000 barrels a day for August, citing summer demand as reason for optimism that the extra barrels could be absorbed by the market. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. More from Yahira in about 30 minutes' time. Up next on the programme, boomerang tariffs.
We're going to be very busy over the next 72 hours. Then on August 1st, you will boomerang back to your April 2nd tariff level. So I think we're going to see a lot of deals very quickly.
Up next, we'll catch up with Mike Pyle of BlackRock, live from New York. You're watching Bloomberg TV. Live from New York City, welcome to the program. Equity futures so far on the S&P. No drama. We're down 0.25%. We're down by 0.4% on the Nasdaq 100 as we come into this week at all-time highs. Under surveillance this morning, boomerang tariffs.
We're going to be very busy over the next 72 hours. President Trump's going to be sending letters to some of our trading partners saying that if you don't move things along, then on August 1st, you will boomerang back to your April 2nd tariff level. So I think we're going to see a lot of deals very quickly.
So here's the latest this morning. Stocks falling as U.S. trading partners rush to finalize trade deals ahead of President Trump's Wednesday deadline. Mike Pyle of BlackRock writing, as macroeconomic and market uncertainty persists, it's time to reimagine alpha. Mike joins us now for more. Mike, good morning.
Good to be here.
It's good to see you, sir. We'll talk about various trading strategies and the ones that have worked so far this year. But let's just start top down, super macro. What are you and the team expecting this week?
So I think the bottom line is we see this week as part of a longer term picture where a lot of trade policy is going to get made, but there's going to be some twists and turns in the road along the way. I think as we heard from Secretary Bessent, August 1 is going to be a pretty relevant point in time. This week's important, but I think what we're looking for is, a lot of discussion, a lot of frameworks getting announced, but this week is not the one focal point in time.
We've had some guests come on this program. Jim Carroll of Morgan Stanley comes to mind, who believes the second half of 25 is the half of clarity. Certainty. If the first half was uncertainty, the second half is clarity. Do you share that view?
I think on a relative basis, that's absolutely the case. The first half of 2025 was peak uncertainty. If you look just in the last week, we've gotten clarity on what the fiscal policy picture is going to look like, likely for the balance of the Trump administration. And I think as the days and weeks accumulate, we're going to get greater certainty around what the trade policy posture is going to be, country by country, but globally as well.
You mentioned August 1st. Can you believe any of these deadlines if they just keep moving and they're self-imposed?
Well, I think that's why the John's prior question is exactly the right one. It's all about the direction of travel, of uncertainty. Is there any fixed point in time where all of this is going to be settled? I wouldn't necessarily bank on it, but is the direction going to be towards greater clarity, greater certainty, more frameworks, more stability? That also seems pretty likely to be the case.
Most people were thinking it was going to be 10% baseline tariffs across the board, basically a ring around the United States. But then the president came out talking about Vietnam, and they have a much higher tariff level. Are you expecting some countries to get higher than 10%?
So I think Vietnam is an interesting case, and I thought your prior guest kind of really got at it. I think regardless of who was in charge in Washington, this issue of Chinese transshipment, China as using third countries as a jumping off point for trade would have been a contentious one. And I think Vietnam is kind of one of those countries that's really in the focal point. I think what we saw announced last week was 20% tariffs, but 40% on Chinese transshipment. And I think that what it gets at is there's this issue of, are countries like Vietnam going to be a hub that's a jumping off point for access to the U.S. market? And how does this U.S. administration think about both striking deals that matter strategically with countries like Vietnam while also being really focused on some of the issues like around Chinese content, Chinese transshipment that are important for President Trump and frankly would be important regardless of who the U.S. president is?
You have a unique perspective because you sat across these people just a year ago, especially the European Union. Are you surprised by how quickly they've changed their tune when it comes to the Trump administration?
Like I said, I think one of the things that's noteworthy and one of the things that I think we expect is this is going to be a path with some twists and turns. And I think markets are expecting that. Markets are, counting on it even. But last time I was here in the studio, we talked about the path with respect to Europe, that path being a pretty challenging one. I think we expected the path that Japan would be more straightforward. Here we are 6-7 weeks later, and it's just the reverse. But I think that highlights that there's a direction of travel. That direction of travel is towards greater clarity, greater certainty. But the twists and turns are going to take us to some unexpected places along the way.
Who has to stomach the tariffs? That's the clarity we really want here. Is it the European exporter, the US importer, the US consumer? What's your base case now, and what are you looking for to some kind of guidance on that very important issue?
So in terms of the macro outlook and
well, let's try and decide who's paying the tariffs, who has to stomach this. Whether it is the US importers, which by definition will have to, but I want to understand who's going to burden the cost. Will it be the European exporter, the US importer, the US consumer, and then try and get our hands around this issue of the US versus the rest of the world when it comes to equities?
Listen, I guess I'd say a couple of things. One, what's clear, and we hear this from the Fed and other economic forecasters, is this is a negative growth shock. This is a positive shock for price levels. That's true in the United States. That's generally true globally as well. So everybody's going to bear the burden of this to some extent. I think one of the things that's been surprising has been the degree to which we haven't really seen this shock yet play out in terms of the price data or in terms of even the activity data as well. And I think what that reflects is, in some ways, the uncertainty that we've seen has two sides of the coin. One side has been huge swings in market sentiment that have really characterized the first half. The other has been corporate leaders, real kind of actors in the real economy, being frozen into place. And yes, that's true in terms of no new capex or limited new capex. That's true in terms of limited new hiring, but it's also true in terms of cautiousness on raising prices, cautiousness on doing anything irreversible with respect to their workforces. And that's because it's a pretty uncertain environment, and doing things that are fixed and locking them into place is not what they want to do. So again, I think it's important to bear in mind that there's a lot of uncertainty out there precisely because actors in the real economy have wanted to pause to see where we're going. And I think we'll get more clarity on that in the back half of the year.
Investors haven't paused. We've seen massive reversals in this equity market, particularly here in the United States. What strategies are working right now? And what strategies do you think will continue to work through the rest of this year?
Yeah, so I'd highlight two things in particular. One, on balance, we still prefer the U.S. equity market to other markets globally, and I think that requires that you kind of hold two things in your head at the same time. Yes, the U.S. is the source of a lot of uncertainty. We've been talking about that. And yet at the same time, the U.S. is also the single biggest destination still for dynamism, innovation, resilience. And that's particularly true in the U.S. corporate sector, particularly true in the technology sector in particular. Those exposures that really get you access to AI, the technological transformations that we're seeing, that's a U.S. story, and that's one that we continue to think investors should get exposure to. The other would just be to say, this is a very uncertain macro environment. Taking big swings at the bat in such an uncertain environment around making big macro calls, that's a hard thing to do if you're an investor. Finding strategies that are going to be primed to outperform, that are more market neutral, that aren't taking big swings in the bat, things like systematic strategies that can deliver alpha in a bunch of different types of market environment and provide liquidity while they're at it. Those types of things that are maybe a little less focused on the macro, a little more focused on delivering alpha in uncertain environments, those are the types of things that we think portfolio managers are really capitalizing on.
Mike Pyle of BlackRock. Mike, appreciate it. Thank you, sir, for sharing some of your thoughts on policy and what's working right now. Up next on the program, Kaminski of AlphaSimplex, Sheila Kahyaoglu of Jeffries, Stephen Stanley of Santander, and Kathy Jones of Charles Schwab.
The fact that the unemployment rate is going down is something that, of course, is quite surprising.
It feels like a lot of optimism has been priced in the market, but we do expect a soft patch later this year.
The story here is not the headline.
If the labor market's okay, their urgency to cut goes down.
Base case, we have them not cutting. Certainly July is off the table.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Just a nice, quiet summer Monday to kick off a trading week. From New York City this morning, good morning. Your scores look like this morning. All-time highs into Monday. Equity futures pulling back by just 0.2%. We're down by a third on the Nasdaq 100 as we wait for the self-imposed tariff deadline of July 9th to come up quickly, just 2 days away, blurring the lines over the weekend as to just what the deadline actually is.
Feels like we're on parallel tracks, right? Because you're saying it's quiet, but at noon today, the president's talking about the fact that the tariff letters are going out. Is he going to share them with the rest of the world? We still don't have the language when it comes to what they agreed upon with China. And then at the same time, the Commerce Secretary said rates are going to be set, but they don't come into place until August 1st. And what I continuously hear, as I heard from the Swiss trade team, is that this administration was pretty honest with them. If we are in discussions with you and we're not done by July 9th, you'll get an extension. So who's getting a letter? Who's getting an extension? Who's getting a higher or lower tariff rate from April 2nd, Liberation Day? A lot of questions to be answered.
A lot of people just starving for clarity. We've said that a few times over the past few hours or so. Mike Pyle of BlackRock saying that's exactly what you're getting. on taxes in the last week and on trade maybe in the next several weeks.
So what he's saying is he can't pinpoint an exact date when potentially some of these deals will come to fruition, but it's the direction of travel. The direction of travel has been a maximalist approach from this president on Liberation Day, April 2nd, a reprieve for when negotiations are happening, and then potentially you will get some sort of deals. I think what everyone has been really shocked about was how Japan and the European Union have seemingly switched places. Japan was going to be first out of the gate. Well, Japan has an election coming up. So it's a little bit challenging for them to make a lot of these concessions. And the European Union, I think, got the message, you're on the back foot and you're going to be left behind. And now they've been quickly rushed to the start of the queue.
Max Kentner, HSBC, publishing just moments ago. To us, the big story in July is not this week's tariffs deadline. It's the start of the reporting season. Delta Airlines this week, JP Morgan next week. He thinks the bar is low. Says the following: any dip this week has to be bought very quickly. This market's seen a massive reversal since the lows of April. Just like that, very quick.
And what's going to be so interesting about when it comes to earnings season is how much is any of this impacting the U.S. consumer? Are they still going out? Are they still spending? Are they still traveling? Or are tariffs starting to bite?
Equity futures this morning on the S&P just slightly softer. We're down by 0.2%. Coming up this hour, we'll catch up with Kaminski of AlphaSimplex as trade tensions weigh on markets. Sheila of Jeffries looking ahead to airline results, and Kathy Jones of Charles Schwab as traders push out rate cut bets. We begin this hour with stocks pulling back from all-time highs as President Donald Trump reignites trade concerns. Kaminski of AlphaSimplex writing equity trend signals are still modestly strong given the volatility and uncertainty in recent months. Katie joins us now for more. Katie, welcome to the programme and good morning. It feels like sentiment is quite one-sided now after the massive reversal over the last several months or so, yet people still come on the programme and say the pain trade is higher equities from here. Do you agree?
I would have to agree that that's what we're seeing, especially in the market data. What was interesting, though, is we did see a little bit of a pivot last week where you saw small caps and perhaps more domestic focus being in ahead. And so I'd say that, the general theme has continually been a little bit more pro-growth and positive for equities, which is something I wouldn't have guessed a few weeks ago in particular.
Katie, you're seeing that in equities. Can you say you're seeing the corresponding thing in the bond market at the same time?
Definitely not. I'd say that the bond market has been very tricky this year. We've seen very mixed signals across different parts of the curve. We've definitely seen short signals on the long end suggesting that yields need to be higher over long term. That may suggest some uncertainty about where rates are going to go over long horizons. But in general, it's been very tricky to trade the bond market recently because there's just been this push and pull between when are rates going to be cut and also just, in general, what are the impact of all these macro themes on fixed income given this?
Are you surprised the bond market didn't get a vote on the One Big Beautiful Bill?
Good question. I mean, I think you haven't seen that much movement. You are seeing some steepening as well recently, like particularly today, you're seeing that as well. So I'd say that, the bond market is not voting yet. It definitely voted on what was going on in Liberation Day. So I think, we just have to wait and see when, bond investors are really voicing their opinions. But really right now, very mixed in fixed income.
Do you think bond investors are going to be paying close attention to this deadline this week, or they feel like it's self-imposed and already the administration has signaled that a lot of these trading partners are going to get more time to really work out the agreement with the United States?
Well, I mean, if you look at just how much movement you have today and how the market has responded to recent events, it's almost that the market is sort of shrugging off some of this news because nothing is really a big shock. It's everything that we've been discussing along the way, and there's been continual backtracking and back and forth. So I think people are waiting to know the real results before they start positioning themselves for the impact of those potential trade decisions.
Katie, in the meantime, what's working in the commodity market?
Not much, I would say. I mean, I'd say that commodities have been up this month, but there hasn't been big swings. Obviously, people have been following oil and energy in general. But when you look at things like gold, which had also been pretty much on a tear this year, it has been sort of stagnating some as well. So I think, looking for that demand increase that might potentially occur because of having stronger growth is something we're kind of seeing right now this month, that commodities have been up, but it's not particularly strong yet, but it's a potential for a trend going the next few months.
Katie, as I listen to you talk about commodities and fixed income, it just sounds like you're seeing convictionless markets in certain asset classes. Would it be fair to describe them as that?
Precisely. I think what we have seen is strong conviction in equities, a weak dollar, but everything else has been kind of wavering around in sort of anticipation to understand the impact of these trade negotiations, but also just sort of, is the U.S. economy strong enough to actually follow through with this narrative? And that's why I think other asset classes are really really waiting and sort of treading back and forth.
Katie, do you find that difficult to reconcile? While we are seeing that conviction in places like equities and in foreign exchange, why you're not seeing the same thing elsewhere?
Definitely so, but I mean, I think these are just at different time horizons. I think equities move quickly. I think the bond market needs a little bit more clarity on multiple economic factors, such as trade, as well as, the overall health of the U.S. economy and the job market. And those are a lot of themes to reconcile, particularly with the Fed that hasn't moved yet. So I think bonds doesn't surprise me, but commodities, I think they're sort of in the wake of what, I would have expected them to move more just with the tariffs themselves fundamentally, but we still haven't seen that yet. So that I think helps investors be less worried about this inflation concern or other concerns related to trade in the short term.
Stuck in limbo. Katie, appreciate the update. Katie Kaminski there of AlphaSimplex on the different tone we're experiencing in both equities, bonds and commodities alike. This morning, equity futures erasing losses. We're down by about 0.2%. Some more clarity, hopefully, on the trade front in the next few days.
Potentially, we can get more clarity at noon. The president saying there's going to be a number of letters sent out to these trading partners setting new rates. Basically, this was your rate April 2nd. This is the new rate we decided to readjust for. And people are expecting that. What's going to be interesting is what happens with the main trading partners. Where are they on the European Union? The EU thinks they're going to get a framework before July 9th. That is a complete reversal than what we were talking about just 2-3 weeks ago. When I was with the president in the Netherlands, the European Union was saying they were going to retaliate against a 10% baseline. Like a snap, that went out the window. So they clearly want something done. And Japan and India, of course, also going to be incredibly important.
We explored this briefly with Kate Kalutkiewicz about 30 minutes ago. She, of course, was a trade negotiator under the president's first term way back then. And she made the point that the deciding factor that goes into whether it's a UK outcome, a China outcome, a Vietnam outcome, I don't think is well understood at this point. What determines what kind of outcome you actually get?
I think it depends on what the president is looking for with each trading partner. Mike Pyle talked about transshipping when it comes to China. That was really important when it comes to Vietnam. When it comes to the UK, I think also part of it was timing. They want both parties really wanted to get to yes. And they were willing to sacrifice, definitely on the UK side, something to get to yes, because they've been trying to get a trade deal with the United States for years. When it comes to China, though, it's really difficult where we are. It feels like we're only taking the first step of a very long road when it comes to some sort of bigger agreement between the United States and China.
Slow start this Monday morning, expecting it to kick off as the week grows a little bit older, to pick up when we hear from the president in the next several hours, hopefully, on which letters he sent and to whom, and what kind of tariff levels we could see in the next several days. Let's give you an update on news elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. We begin with the deadly flooding in Texas. Rescuers there are still searching for survivors after catastrophic flash flooding over the weekend. The disaster killed more than 80 people, including many children who were attending youth camps. It's feared the casualty count will climb with more heavy rain forecast in the coming days. Meanwhile, the Trump administration is preparing to send tariff letters, as you were just speaking about, to dozens of countries, with the administration's 90-day tariff pause set to expire this Wednesday. Treasury Secretary Bessent telling American media moments ago that his mailbox is full of new trade offers, and we'll see several deals announced in the next 48 hours. And President Trump is planning to restrict shipments of AI chips to Malaysia and Thailand. Sources telling us here at Bloomberg the move is part of an effort to crack down on suspected semiconductor smuggling into China. The regulation would mark the first formal step in President Trump's overhaul of former President Biden's AI approach. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 15 minutes' time. Up next on the programme, the morning calls. Plus, Sheila Kahyaoglu of Jeffries looking ahead to airline earnings over the next several days or so. That conversation up next, live from New York. You're watching Bloomberg TV. The opening bell 1 hour and 16 minutes away. Equity futures on the S&P 500 negative by just 0.2%, down by a third on the Nasdaq 100. On the Russell this morning, softer by 0.3%. That's the price action. Let's get you some morning calls. Kicking off first with William Blair. Downgrading Tesla to market perform, citing headwinds from President Trump's big, beautiful bill. That stock is down by 6%. Your second one comes from Raymond James, double downgrading Wells Fargo to market perform, saying the stock's favourable fundamentals are already reflected in its valuation. That stock is down by 0.7%. And finally, UBS lowering its price target on Delta Airlines to 63, looking for an inline second quarter earnings report. That stock is positive by 0.25%. Let's stick with Delta. Earnings due before the opening bell on Thursday. Sheila Kahyaoglu of Jeffries keeping an eye on travel demand this summer, writing, "We observe that while passenger counts remain below last year's level, the gap has been narrowing." Sheila joins us now for more. Sheila, good morning. Good to see you.
Good morning.
Let's get back to February. February was when the warning started, and it started from Delta Airlines, warning about things like DOGE, consumer sentiment, air aviation issues as well. What do trends look like since the start of this year?
It's very hard to cherry pick these airlines. I think they all have an uphill climb, to be honest. What we're looking for is sequential improvement, Q1, Q2, Q3, Q4. Q1, the exit rates in March were down mid to high single digit for domestic mainline cabin. That's pricing. We're assuming some improvement, but still down about 3% in Q2, and then some improvement as we exit the year up. So we have an improvement priced in, but I think trends are stable at best, and we're seeing discounting in mainline cabin in the U.S. and Atlantic.
Are you seeing that at premium and budget and premium?
Mostly in the budget, in the mainline, in the back of the cabin. And Q2 is a big quarter. It represents about 45% of EPS for airlines. So these trends being in line to stable to March is not uplifting.
Have you seen demand, though, continue when it comes to premium cabins and business class?
It seems like it is for now, but we're seeing trends pretty stable. There's really no data source out there, but we're not seeing improvement. Even with TSA volumes at peak in June and over the weekend, they're only up 1% year over year. TSA volumes for travel are flattish, so you're not seeing consumer really improve.
When it comes to consumer concerns, how much is tariffs lingering for the consumer as well as for the airlines?
I think unfortunate for Delta, they're going to report again on another tariff day. So I think that still lingers, and you're seeing corporate hold back a little bit. So I think you'll see more of the same. An improvement from the March trends, but certainly not a big improvement in Q2, which represents the biggest quarter, and exit rates for Q4 are already pricing in some positivity.
How difficult is it for, say, Delta, they're going to be reporting potentially on a tariff day, for them to talk about this uncertainty when the goalposts seem to be moving out of Washington?
Yeah, I think, we've seen a big move in airlines, up 15 to 20% since April. So they're already pricing in this improvement. So hence why we prefer our commercial aero coverage rather than our airline coverage. Because I think you still have some downside risk to the airline names.
I think in the tax bill there was $12.5 billion set aside for the overhaul of air aviation safety. Talk to us about that. Can you calculate just how much the consumer has held back because of these aviation issues over the last year?
There was some book away with the incident in D.C. For American Airlines. Similarly, Delta saw that too. So you see, pockets of holding back, but I don't think I think it's more of a macro concern that airlines have and corporates have that are holding them back.
Well, let's pick out Newark and let's pick out United Airlines. I know a lot of people, and this is just sort of anecdotal conversations that we've all had. We've had the same conversation, avoiding Newark because they don't want to see their plane cancelled because of aviation
I think
issues
we could get
and
back
air traffic control.
Scott Kirby, I think over the weekend tweeted, or whatever it is, on X, said Newark was the best airport in June, and it's true. They had the lowest cancellation rate in the month of June. Cancels for over the weekend were 4%. Delays were 25% because it was a rough weekend for travel. Orlando, Denver were some of the worst performing airports, but good news is United seems to be back at Newark, and that represents about 10% of their traffic.
Is that because of what Newark's been doing or United's been doing?
I think a little bit of both, but the air traffic controller shortage still exists. That's still a problem that we have to improve over. It'll take 2 to 3 years, and that's where, you know, some of the providers will help with that.
And how much of what John's talking about, the one big beautiful bill and some of that funding, how much could that be actually a boost to the airlines?
A bit. It'll just help sort of expedite systems. So folks that make the systems are Raytheon Technologies, Leidos, SAIC is a company that trains air traffic controllers. So those are the big beautiful bill will really help push those through, but it represents 2% of sales for most of these companies, so not a big needle mover.
That's the airlines. Let's talk about the airplanes.
Sure.
Let's talk about Boeing.
Sure.
What position is Boeing in now?
In a decent position. You're seeing deliveries. We think June deliveries could be at a rate of 42 a month on the MAX. We had projected 32. So you're seeing 10 extra in June. You take that rate forward for the next 6 months, it's an extra $500 million to $1 billion of cash flow for Boeing. So Boeing is steady as she goes. It looks like things are okay, and tariffs are working in favor of them.
Speaking of tariffs, we've seen NVIDIA used as a chip in foreign policy, excuse the pun. Is Boeing in the same position, or at least a similar position?
That's been our thesis. What else could you sell for $70 million to $200 million and sort of help reduce trade deficits and use it as a bargaining tool? We saw that with Vietnam a bit. Unfortunately, the Paris Air Show was light in order volume because of the Air India incident, which we still haven't heard much about. So I think those are yet to come.
China had a ban on its airlines accepting Boeing planes, then it lifted it. So to John's point, do you expect this lever just to continuously be pulled, especially when Trump is in office and he likes to dial up the temperature before he dials it down?
Yeah, I think we think about global production at 1,700 a year. Whether that comes from Boeing or Airbus, you choose the split. But countries could only order from two companies, essentially.
But does the political environment give Airbus some help as opposed to Boeing?
Not really. Their production is really capped. It's hard to go above certain rates. So their production capacity is going to be 75 a month on their biggest narrow body, which is the A320, versus 52 for Boeing on the 737. Airbus is in the 60s right now. So their production rate is going to be capped. So airlines have to go to Boeing at some point, which they are. We're seeing that momentum pick up. We just didn't see the order momentum, and the backlogs are 5 to 7 years, so you're pretty solid there.
Some better trends. Sheila, appreciate your time. It's good to see you. Thank you. Sheila Kahyaoglu there of Jeffries, the latest on the airlines and on Boeing as well. Boeing increasingly a chip in foreign policy in these trade talks. Let's get you an update on that. The Treasury Secretary, Scott Bessent, speaking just moments ago ahead of that Southern Post deadline this coming Wednesday. With the latest, here's Bloomberg's Tyler Kendall in Washington. Morning, Tyler.
Yeah, hey, John. Well, importantly, the Treasury Secretary, Scott Bessent, did also say, not when it comes to these trading partners that we're expecting to get these letters, but on China. He said that he would meet his Chinese counterpart in the next couple of weeks and that perhaps they could be prepared to move beyond issues of trade if Beijing is willing to negotiate. That would be a pretty substantial development if true, considering that we know that the White House is still raising concerns about allegations of Beijing slow-walking the export of those export licenses when it does come to critical minerals. Now, when it comes to the deadline that's approaching, he reiterated that we could expect to see some deals in the next 48 hours. He did say that his inbox is full of offers, but that's pretty interesting since we do know that these letters are designed to try to spur our trading partners into putting their best offer onto the table. The Treasury Secretary has repeated that their goal here is to apply maximum pressure to try to get these countries to essentially offer exactly what the administration is trying to get out of them. We're going to have to wait to see how this develops. And then lastly, I'll add that he clarified that the 20% rate on Vietnam is an overall tariff rate. It doesn't stack on top of anything else, but he did say sector-specific tariffs could be coming down the line.
So something else to potentially worry about and for the market to have some uncertainty about. Tyler, when you're talking about these letters and the president's talking about them, are they to set a new rate or is it to negotiate? Are we back to square one? Are these rules of the road or is this all a negotiating tactic?
Well, Annmarie, our analysts at Bloomberg Economics say that there's sort of three different scenarios that we could see here, and it depends where the country falls, which bucket they fall into in terms of our trading partners. Some could be framework agreements like Vietnam, for example, but as we just heard from the Treasury Secretary, we're still getting additional details about what that looks like. The second would be negotiating, those countries that are trying to make good faith effort, as the administration would characterize them. Then perhaps they could get a little bit more leeway here to continue talks down the road. But then the third would be we are expecting some countries, actually the Treasury Secretary said it could be upwards of 100 trading partners, those smaller countries, to basically get that tariff rate dictated to them. That's likely going to be that 10% baseline tariff for those countries that don't do a lot of trade with the U.S. But it is interesting to see the messaging here because the White House really does want to show some sort of forward progress, and they're going to sort of pitch these smaller deals as exactly that, as deals, even though it doesn't appear a lot of negotiating went on.
And he's saying he's going to be sitting down with his Chinese counterpart in the next few weeks. Where is the agreement with China? Because they say they have one, yet we have not seen a single piece of language when it comes to this framework off of the Geneva and London talks.
Right. I mean, that's really what stuck out to me about his comments was that there appeared to be towards some sort of path to continue the negotiations. And Annmarie, you were there in London, so you know better than anyone that agreement in London was basically an agreement to Geneva, which we know was an agreement to keep talking. But it does appear that one of the holdups has been these export licenses when it does come to critical minerals. It was interesting to hear the Treasury Secretary say essentially that they could move past trade in these talks. We know that they want to look at some of those non-trade barriers like lax IP protection, for example. So perhaps this could evolve into a broader conversation since we know it is going to take time for a deal to be struck with Beijing. The last time the Trump administration made a deal, it took more than 18 months to accomplish the Phase 1 trade deal. And a lot of different things went into it, say agricultural purchases, for example. And we know that the administration has floated some sort of catch-up provision just to get back to the levels that were agreed back then. So this is definitely a moving and an evolving process. But one thing is for sure, the White House wants to show that they are making progress here and that countries are coming to the table as they try to get some sort of agreement put out there.
Tala, thank you. Tala Kendall down in Washington. Thank you very much. Michael Zezas of Morgan Stanley Publishing. Base case for them, kick the can.
Yep. This is self-imposed deadline. So I think you can also give the administration a little bit of leeway when it comes to kicking the can because they decided these deadlines. But if you don't have the deals in place, what else are you supposed to do? And I struggle to find that they have the deals all ready to go. Because the second the president has an ounce of feeling that he's going to have a deal, he goes immediately to Truth Social with excitement like he did with Vietnam.
Up next on the programme, we'll count you down to some of these trade deals. Plus, we'll look at the economic data following a much stronger than expected headline payrolls report. We'll catch up with Stephen Stanley of Santander. Plus, Yahira with your morning movers, Tesla falling as Elon Musk and his feud with the president picks up. The opening about 60 minutes away. Equity futures pulling back by 0.2% on the S&P. On the Nasdaq 100 down by a third. On the Russell softer by 0.4%. As we count you down to the opening bell with your morning movers, here's Yahira. Hey, Yahira.
Hi, John. We start with Tesla down 6% in the pre-market after Elon Musk launched his new political party. And the way Dan Ives put it to us earlier is that this move lower is on the prospect that this could sharpen the divide between Musk and Trump, and it could lead to Trump blocking Musk's autonomous driving plans, and also this idea that Musk is too distracted by politics at a time when Tesla needs his leadership. Next up, we have CrowdStrike. Shares of the cybersecurity firm are lower 1.3% after Piper Sandler downgraded the stock to neutral. But this is more of a price story than a fundamental story because long term, they believe in the stock. But analysts say that CrowdStrike has already run past their price target, which is $505, and that they see limited upside from here in the short term. And we end with Walmart. It is a slight move lower, down about 0.25%, but I want to highlight it as we count down to President Trump's July 9th tariff deadline this Wednesday. The world's largest retailer is, of course, one to watch since it's very exposed to tariffs. Like many other retailers, it imports its products from toys to electronics from places like China, India, Mexico, and more. So a lot of questions as to where we end up with deals with these countries. And of course, as you've been asking, John, Who shoulders the cost?
Yahira, appreciate it. It's a big question. More from Yahira in just a moment. Got to go back to the retailers. If you think about how things evolved over the last several months, you had April 2nd and Liberation Day. In the weeks after that meeting that took place on that Monday between the biggest retailers in this country in the White House, talking to the president about what could happen if those tariffs stayed on, was a pivotal meeting, not just for this economy, but for this market too.
Absolutely. Both sides maybe trying to explain what they were dealing with in terms of supply chains, who's going to eat the tariff rates, what that would mean for consumers and consumption when it comes to an administration that really ran on this pledge of affordability and to bring prices down. The retailers have been center stage when it comes to tariff policy.
It could be a big week for trade. It's a muted week for economic data following a strong payrolls report. Bloomberg's Mike McKee joins us now with more. Morning, Mike.
Good morning, John. Well, you, me, and Annmarie didn't get the message, didn't get the memo, but I'm calling this work from beach week for people on Wall Street because there isn't much going on the economic front. We get the National Federation of Independent Business Small Business Survey tomorrow, and the New York Fed's survey of consumer attitudes, which the category that everybody watches is inflation expectations. Neither of those likely to move markets, although we'll watch for small business hiring plans. On Wednesday, we get Fed minutes, but that's 3 weeks ago in terms of what they were thinking of, and they already told us how they thought it would affect the economy in the summary of economic projections. Thursday, we do get claims, and if there's any significant movement there, that may be the indicator of the week. Alberto Musalem and Mary Daly are speaking Thursday, but what can they say? It's trade week. Everybody's waiting for the letters, and then we have to try to figure out what it all means for the economy. Next week, though, next week is what you're going to want to pay attention to, CPI, PPI, and retail sales. So put on the sunscreen for this week and then come back to the office and sit at your desk and watch Bloomberg at 8:30 Eastern Time. The question that we can ask going into this week is what happens at the end of the week to uncertainty? The uncertainty over trade index put out by Baker, Bloom, and Watts is right now very close to still record high levels. It's come down a little bit as the president's backed off on some of his tariffs, but this just suggests that people are not going to be spending until they have a much better idea of what tariffs are going to do to their bottom lines. So we'll watch for that and see if there's any impact. But still, not much market moving news on the eco front this week.
Mike, it sounds like you're ready to leave. Before you go, could you just give us your assessment on payrolls last Thursday? Headline looked decent, first look. Second, third, fourth look, there was some pushback from a lot of people.
Yeah, the thing that people have been watching is the unemployment rate, and the unemployment rate did come down, but largely because we had a big drop in the size of the labor force, almost all of which was accounted for by foreign-born workers. And if that's the beginning of a trend, then the economy could see problems ahead, even if the unemployment rate doesn't rise because the denominator is smaller.
Mike McKee with the update. Mike, thank you. Enjoyed the journey. Does he take the bus to the Hamptons, get a car, drive, train?
The jitney's right outside the office.
There you go. Get ready.
It's most convenient.
Mike's got his bags ready. Stephen Stanley of Santander, luckily, he's not on the beach, he's with us. He had the lowest payroll forecast on the street. He wrote the following. The June employment report is on its face unambiguously strong. The deeper I delved into the details, though, the less impressed I became. Stephen joins us now for more. Stephen, good morning.
Morning.
What didn't impress you?
Well, I mean, the bulk of the gain, of course, came in the government sector. And I think that's likely a one-off, some seasonality around the end of the school year. There are a lot of education jobs added, which probably just means there were fewer layoffs at the end of the school year than the seasonals assumed. You look at the household survey numbers, the unemployment rate fell, but it didn't really fall for the right reasons. It fell because the labor force shrank. And at the same time that the labor force shrank, there was a huge increase in what the Labor Department calls people who are marginally attached to the labor force. So these are people that want to work, are generally looking, but for whatever reason in June chose not to look. That might be an immigration story, or it could be just random noise. But in either case, the fact that the unemployment rate also doesn't really tell us that the labor market's getting that much better.
How well understood is the supply side story?
I think people are talking about it. I think people understand that what we call the break-even pace of employment growth is probably a lot lower today than it was a few years ago when immigration was so strong. So I think that's the main issue, is that the labor market at the margin is tighter than it would be otherwise. Of course, on the other side, you've got weakening in demand at the same time, so it maybe helps to balance out a bit.
Cracks under the surface. Do you know how many times I've heard that phrase, cracks under the surface? How long before we see them at the surface?
Well, I think what you're seeing right now is really, in my view at least, is temporary. It's businesses who are holding off on whether it's capital spending, hiring, whatever the case may be, and waiting for policy-related certainty. We've now got the fiscal package through, so that's one piece of it. Now we're hoping that the administration is going to, tie a bow around tariffs at some point over the next few months. And at that point, I think businesses will be able to move on. And I think at that point, hiring may begin to pick up again. But until we get there, I would expect that you're going to see very soft job growth.
You said next few months. How disappointing is it for businesses that it's not Wednesday, as promised, July 9th?
Yeah, I mean, obviously the sooner the better. And I think if for most businesses, I would imagine the lower the tariffs, the better. But at some point, businesses just want certainty, right? So I think the hope, in my view, is that we get this thing, this whole issue resolved one way or the other by the fall.
The Fed also wants certainty when it comes to tariff rates so they can understand policy and direction of travel, potentially of price adjustments. Is the administration itself, shooting themselves in the foot? They want Powell to cut rates, but Powell's basically saying, I can't cut rates until I know the tariff rates?
Well, yeah, I mean, it's a bit of a puzzle, I think. I think from the Fed's perspective, one thing that we've seen here is that the timing of the impact of tariffs on the economy has come a little later, right? We really haven't seen much in the data, certainly through May. Arguably, you saw a little bit in the jobs numbers for June. I think you'll see some in the CPI next week. Certainly, retail sales have started to soften up a little bit. But it feels like the bulk of the impact is coming in the summer. The problem for the Fed is that they can't really decide what to do until they've seen the impact come through and then start to dissipate again, particularly on the inflation side. I think what they were expecting was that prices would shoot up and then come back down. Well, we haven't even seen them shoot up yet. So the Fed is definitely still in a waiting game.
So you're a September guy. Are you a September guy with risk skewed towards maybe later cuts?
Yes, because if the inflation story drags out longer, I think the Fed waits a little longer. That's all, and the Fed's been very explicit about that. That all hinges on the economy hanging in there, right? Powell has said we have the luxury of waiting because the labor market is still solid, the economy is still solid. Obviously, if the economy starts to fall apart, that's a totally different story.
Do you think he does have that luxury?
I think he will. I think, I think the underlying fundamentals for the economy are pretty good. I think what we're seeing right now is just the temporary impacts that are coming through from the tariffs. So I think the economy will muddle through, and that will give them some time. It's not going to be a comfortable period, right, because I'm sure the administration is going to maintain the pressure. But so far, the Fed seems perfectly willing to wait.
Well, to that final point, the outlook that you describe as you describe it, I'm just envisioning this Federal Reserve on a collision course with this White House. How do you think that's going to turn out in the next several months? Are we going to have that shadow Fed chair, and does that complicate things for you looking out to 26?
Well, I think the selection of the next Fed chair is definitely going to be a pivotal moment for the markets. Right now, we're all focused on tariffs in the short run, but once, again, presuming that gets resolved over the next few months, it feels like the next Fed chair is the next big thing for the markets. And the question in my mind is really, does the administration choose someone that the markets view as independent and credible, or do they pick someone that is perceived as just going to do the president's bidding? And that, I think, is going to be if he does that, I think it will be a problem.
If he does that, what's the market reaction?
Well, we've already seen little signs of trouble in the long end of the Treasury market. On the fiscal situation, if the markets are concerned that the Fed is not going to, is going to do the job on inflation potentially, that it feels like to me that's what you're going to see. You're going to see higher long-term yields, and it's probably not good for risk in general either.
I'm not going to ask you for names, but what are the defining characteristics of someone who is credible and someone who isn't?
I think it's two. One is what you would always say, which is qualifications, right? Someone that has, the economic chops, the policy experience, perhaps. And then the second one is going to be, do they have the appropriate distance from the White House, or are they viewed as a yes person?
Stephen Stanley of Santander. I think we're all thinking about those names right now and who's who.
Definitely. So I think obviously it's those that are on the inside, like his NEC director, Kevin Hassett. He would be someone that I think the market would say this looks like a yes man to the President of the United States, over, say, Governor Waller, who's already at the FOMC, who has had come out with his thoughts for months, even before his name was floated potentially to be the next Fed chair, someone who is viewed as credible by the market and also by his colleagues.
Governor Waller, seemingly the easy option at the moment, at least. It's good to see you, Stephen. Thanks for dropping by. Lots to think about. Equity futures, by the way, still negative by about 0.25% as we work our way through to the opening bell. Mike McKee says you should all be at the beach. This is going to be a quiet week. The words of Mike McKee from just moments ago. Let's give you an update on stories elsewhere. Back with us with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. We begin with the deadly flooding in Texas. At least 80 people have died and dozens more are still missing following Friday morning's flash floods. Water levels on the Guadalupe River rose by 26 feet in just 45 minutes. Meanwhile, Camp Mystic in Hunt, Texas confirmed this morning that 27 campers and counselors died in those floods. Meanwhile, President Trump says the U.S. will discuss a TikTok deal with China either today or tomorrow, and he says that they pretty much have a deal. Meanwhile, the information also reported that TikTok is building a new version of its app for U.S. users ahead of a planned sale to a group of investors. The company reportedly plans to launch it in U.S. app stores on September 5th. And as we've been talking about all morning, Elon Musk says he has formed a new America party after President Trump signed his tax cut and spending bill into law that the former First Buddy repeatedly denounced. Musk made the announcement in a post on X after 65% of respondents to a poll on the platform backed the idea. That's one way to make decisions. That's your Bloomberg brief. John?
Yahara, thank you. Thanks for this morning. Appreciate it. Up next on the programme, we'll set you up for the week ahead, a quiet week ahead, as we approach a self-imposed tariff deadline of July 9th, a deadline that's already sliding. Plus, we'll catch up with Kathy Jones and Charles Schwab as traders push out rate cut bets. Live from New York, you're watching Bloomberg TV. The opening bell is about 43 minutes away. At the moment, equity futures are negative by about 1/3% on the S&P, 0.4 lower on the Nasdaq 100. As we count you down to the opening bell, just a sneak peek of this week's trading diary. At noon today, President Trump starting to send tariff letters. Looking ahead to Wednesday, President Trump's self-imposed tariff deadline and Fed minutes are due. Thursday, Delta Airlines earnings plus another round of jobless claims. As we count you down to noon, 3 hours to go until those tariff letters go out. Bloomberg's Tyler Kendall joins us now from the White House with more. Morning, Tyler.
Yeah, hey, John, as you said it, we're in the 3-hour countdown to 12 p.m. Eastern, where President Trump says he's going to start to send these letters out. He said we could expect anywhere from 12 to 15 countries to receive them. And our understanding is the letters are going to go out today, but the levies aren't going to be collected until August 1st, perhaps suggesting that there's some room for negotiating here for those countries that, as the administration says, puts their best offer on the table. And I'd point you to two quick developments that happened this morning. One is that President Trump threatened an additional 10% tariff on any country that aligns with BRICS after their summit over the weekend, and President Trump says they put forward anti-American policies. So that's one angle to watch here, particularly when it comes to India. And then the second, of course, as you well know, is that we got confirmation this morning that the European Union's Ursula von der Leyen held a phone call with President Trump over the weekend. It does appear to be a reversal in favor, really, for the EU, which had been at the back of the negotiating line.
Tyler Kendall with the latest. Tyler, thank you. Outside the White House, more from Tyler later on today. Looking ahead to that self-imposed tariff deadline, Kathy Jones at Charles Schwab has this to say. The tariff bump in prices is still on the horizon as the administration settles on deals that will lift import costs. We expect most of the increase to get passed along to consumers. Kathy joins us now for more. Kathy, welcome to the programme. Just want to pick up on that last line. Why do you expect that most of the increase will get passed along to consumers?
Well, for larger companies, even though there might be some room to absorb some of it in margins, there's still enough demand in the economy that they could probably pass those along. Traditionally, that is what importers have done. They've passed along the any sort of excess cost from tariffs onto consumers, and I would expect them to do the same. And then if you're a small or medium-sized business with a smaller margin, profit margin, you're almost forced to do it, even even if it hurts your business, because you can't do business unprofitably for very long. So I think we should reasonably expect most of it to get passed along.
Kathy, if you believe it could lead to an increase in costs and prices, do you also believe it could lead to a slowdown in economic growth? And if that's the case, how would you push those views through this bond market this morning?
Yeah, that's the tough part. So many of these policies have sort of opposing forces. So on the one hand, yes, it boosts prices at least one time, if not for longer term, but also slows growth, right? Because some of the companies that are paying these tariffs won't be able to absorb the costs, or their consumers won't be able to pay the costs, and we'll get a drop in demand. So I think it has been the question all year, what comes first, the tariff price increase or the slowdown in growth? Our expectation is that the further we stretch out the tariff issue, the more likely it is that the growth issue will come first. So we are expecting slower growth in the third and fourth quarters and a rate cut by the Fed in September in response to a worsening job market.
But companies are always forward-looking. Why haven't they passed on the tariff costs yet?
Well, some have. I mean, we've seen some evidence that companies are already taking advantage of the tariff news to pass along higher prices. Others clearly want to wait and see what the tariff cost is, because we still don't have a lot of certainty outside one or two countries, whether it's going to be a 15% or a 20% or a 10% or 25%. What do you pass along until you actually see it in the invoice? It's hard to know what to pass along.
Well, we're going to see potentially some rates today at noon, or they're going to be rates that are sky high that remind you of Liberation Day to revamp negotiations. The uncertainty looks like it's going to continue when it comes to trade at minimum until August 1st. How difficult is that going to be for the Fed to then potentially cut in September?
Yeah, it could push back a rate cut from where we've been anticipating September for quite some time. It could push it back until December or even into next year. And you saw that in the distribution of the projections at the last Fed meeting, where 9 members saw one or no rate cuts this year. And that's pretty much half the committee right there. So very much a divided Fed. And I think some of those who are not anticipating rate cuts this year are looking at that as a reason to hold off. And you also have, a contributing factor to all this is the weakness in the dollar, which will also add to inflation pressures. So, and maybe also limit what the Fed wants to do in terms of easing rates. So it's a really tough environment right now to make a policy call.
So, Kathy, looking across the yield curve right now, the difference between 2s and 10s is about 50 basis points, a tiny bit of steepness back into the curve. Do you think the 10-year rate, the yield at 4.36, accounts for some of the risk that you've described so far this morning?
I think it has some risk premium built into it, but it certainly could expand. So, 2s, 10s could move up another 30, 40 basis points pretty easily. And we saw a pretty good move at the long end when we finally got the budget passed. And I think there is room for further steepening of the curve, whether that's driven by, rate cuts and a bull steepening or a bear steepening. My concern is it might be more of a bear steepening at this stage of the game.
Are you more comfortable in the front end of the curve then, Kathy?
Yeah, we've been, kind of 5 to 7 years kind of trying to tread water here between, because you have these opposing forces, right? So it's really, you don't want to be too short because if the Fed does start cutting, you've already got the market discounting a couple of cuts. You're not getting as much yield there. But we don't want to go too long yet until we actually see the economy slow down. And then I think we'd be comfortable extending. So we're kind of in the 5 to 7 year area.
You're not alone, Kathy. I've heard that a million times over the past few weeks. Kathy Jones there of Schwab. A lot of people in fixed income think the belly of the curve right now seems to be the sweet spot. At the front end of the curve, the very front end on a 2-year at the moment, we're down by about a single basis point. The 2-year yield is about 3.87. On 10s at the moment, yields up by a single basis point, about 4.36. As we work our way through this week, looking ahead to earnings with Delta Airlines on deck later this week. Before we get there, we've got to talk about trade. These letters go out in 3 hours' time. Who are those letters going to?
And what are they exactly dictating? Is it just a new tariff rate, or potentially is the president announcing a deal like he did with Vietnam? And then you go back and ask the Vietnamese what went on, and they said, actually, we still are in discussions to get some more concrete proposals. The fact of the matter is we don't know. What I do know is that if the president had deals, he would be announcing them immediately, especially some of these big trading partners. And I think that's where the Treasury Secretary said over the weekend, they're dragging their feet. Potentially, the president is trying to have a maximalist approach once again at the final hurdle. We heard that from Kalutkiewicz, individuals who worked for him. But we just don't know yet what's going to be announced, who they're going to, if they're going to even release the language, because we're still waiting on the language when it comes to China.
You mentioned Japan. It's amazing to see how Japan has fallen to the back of the line. When a few months ago, a lot of people might have said they're at the very front of the line. All of a sudden, they've replaced Europe. Just like that.
Because politics is local, and they have a domestic politics issue because they have an election coming up. And you heard the prime minister yesterday on local television saying we were going to, quote, stand firm, stay firm when it comes to these trade negotiations. But it's getting at the heart of really sensitive political issues inside Japan when it comes to the auto sector, when it comes to things like rice. This is what the Trump administration is trying to get the United States, more of their exports into Japan. And when you're up against domestic politics, you're going to have to say, OK, we can maybe do a trade deal with you. We need to get over this election cycle.
It's nice to have a quiet start to the week. This week is going to heat up in a few hours' time, potentially, as the president sends out those letters in 3 hours and 4 minutes' time. Equity futures at the moment pulling back by about 1/3%. The opening bell about 34 minutes away. Coming up tomorrow, we'll be catching up with Ed Yardeni of Yardeni Research, Kelsey Barrow of JP Morgan Asset Management, ARK Invest CEO Cathie Wood, and Amanda Lynham of BlackRock. From New York City, I hope you had a peaceful July 4th weekend. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.